people signing up right now. Right now, we're just going to wait for the few folks that just got notified about the YouTube alert. They know about CJ Wallace LLC and how we educate you on business credit. But there's something different that we're doing tonight. It's going to be business financing. Business financing. How many of you want to know about business financing tonight? Business financing. That's what it's all about. Now, I know you're going to be financing different things because it's the Christmas season, right? You're going to be financing, some of you are going to be financing cars. Some of you are even going to be financing Christmas trees. And you won't be done paying for that Christmas tree till what? 2022. I mean, there's a big Christmas trees, whatever you want to finance. Tonight, we're going to be talking about business financing. We're going to wait for even more people to hop on. And when you hop on, go ahead and show us some love. Where are you from and what is your first name? All right, if you want to have your call sign out there too, go ahead and get the call sign there. We are definitely doing this for you, all right? And if you have any questions, please don't hesitate. Ask, okay? This is the time to ask during the video, during the live. If you want to, hey, Emily, if you would like to, I don't know, shoot me an email, creditwiz@investorpro.org. creditwiz@investorpro.org. All right? Absolutely. Do you know what the 3 C's are? The 3 C's of business financing. Do you know what they are? Okay. Yeah. Oh, yep. All right. Now someone just corrected me. There's not just 3, huh? How many are there? How many are there out there? Okay. Go ahead. Don't be shy. How many C's? Emily, please. We already know you know everything. So that would be cheating. All right. How many C's are there in business financing? All right. How many C's?
If you don't know,
how many C's? And of course, if you don't know, you're gonna learn tonight.
Well, why don't you start?
I said 3, right?
Cover those first 2.
How many are there for real?
Yeah.
Okay.
Character.
I do character.
Okay, you just heard one of them. Character. Did somebody just say carrot? Listen, that's diamonds, guys. That's diamonds, all right? Wrong financing, right? I mean, you can still finance the diamond, of course, right?
Cash flow.
Right.
Cash flow, collateral,
That's right. As you're hopping on, we're talking about business financing. Go ahead and yell out your name. What's your name and the state you're from? Your name and the country you're from. Someone even dialed in from the Philippines, from the Netherlands. That was awesome, all right? Why? Because they're wanting to implement this, okay, even overseas. Did you know that it could happen overseas? That's amazing.
After
Shannon from Cali. Shannon from Cali's in the house. My goodness. Don't be afraid to ask questions. That's what we're here for. We are here. OC from Vegas. What's going on, OC? Good to see you again. It's going to be totally different than last week. Okay, we're going to be talking about business financing. Nas from Cali. There you go, Nas. Absolutely. We're going to be talking about business financing, helping your business out, leveraging your business. Ms. Janice from Chandler, Arizona. Man, you're in Arizona too? I'm in Arizona too. Wow, Southern Arizona's in the house. Arizona is in the house. Chandler. That's right. Perfect. You know, let me tell you a story. One time I was in Phoenix, right? Which Chandler is like a suburb of Phoenix. And I was there and I was walking out of my friend's house. I went to go get something. I think it was like some shower soap or something like that. So I went to go to Walgreens because it was like 12 o'clock at night. And as I was going to Walgreens, you know how you just want to make a circle, maybe just want to get some exercise in. So you walk around instead of walking where you come from, right? Listen, folks, a 30-minute walk turned into I'm not joking, a 5-hour adventure. I mean, I heard gunshots. Okay, I saw some weird things I wasn't supposed to see. You know what I mean? Darkness all around me, walking on these roads. It's because I thought, right? I thought that Indian School Road, this road in Phoenix, ran perpendicular to Camelback. It doesn't. It runs parallel. That's why I was going on forever. And you would think, man, it was only supposed to be 30 minutes, man. Shouldn't you have known something after an hour?
That's a good one.
I mean, it was 2 o'clock in the morning, all this, stuff was, I wasn't really there, I was sleepy, man. And I was really sleepy when I saw the house. And then I said, well, the Denny's is right across the street. So I ate at Denny's first. Then I went to the house and crashed out, guys. Yes, I did. Yes, I did. Now, why did I tell you that story? I told you that story not only to make you laugh, right? But to show you if you don't know where you're going, it could take you a long time to get there, man. Like, you'll eventually get there, but don't you want to know where you're going? And that's why this channel exists. That's why Ray Joseph Smith and CJ Wallace is here on the channel tonight. We want to show you what is business financing about, okay? What is it about? How can you implement this in your business, in your life? All right, folks, that was a true story. Oh, man, I tell you. Now, I'm going to go ahead and yell out. Look at this. Stephen from Arkansas. Thank you, Miss Denise. Stephen from Arkansas. Ambrose from Aberdeen, Mississippi. Woo! MISSISSIPPI. Yes, I'm telling you, Atlanta was a true story. I'm telling you it was. Yes, it was. You don't care for Phoenix? Yes. Dwayne Mayweather. What's going on, Dwayne? Faithful Dwayne. Illinois. Sean Johnson up here in Tampa. Youngstown, Ohio. Listen, we just connected with someone over there in Florida. They are getting their business credit profile established the right way. So proud of them. They're any questions for me right now? Do you have any? Do you have any? As we begin in the lovely Keller Williams office. Yes, this is the Keller Williams office, folks. Yeah, I love the fact that I can go to this office, meet with some great people, um, teach their clients or consult with their clients about, hey, Cesar, what's going on? Good to see you. And so what we want to do is we're going in, okay? Not only are they wanting to buy a home, they're also wanting to build businesses, okay? And we show them, listen, you can bootstrap your business if you want. You can take your hard-earned savings if you'd like. You can do the personal guarantee and come close to losing your house because you had to mortgage your home, or you can at least consider, right? You can at least consider business financing, business credit to leverage your business. Absolutely. And they're starting out and they're getting these loans and they're getting these loans.
Oh, wait,
and
I
then they implement what is called the velocity banking method. Are any of you familiar with that? The velocity banking method. All right. We're going to be coming out with a class as well. Chill Will check in from Newark, New Jersey. No way. Willie, you just got your business? Congratulations. Do you have business credit? Absolutely. You just got it, man. Congratulations. Congratulations. Let me know. Let me know how I can help, Willie. Let me know how I can help. All right? Listen, folks, I love getting feedback. I love getting testimonies from people that have been helped through whether it's business credit or velocity banking. I love testimonies such as, man, because of the velocity banking method, my credit score jumped 100 points in just a little over 3 months, I believe it was. And that was a huge deal to him because he was at a 430, something like that. And so he jumped to like a 530. And then he recently told me, man, now I'm at a 6. And so he's just making those big steps, man. It's just a real story from real people. This one guy got a black card from it. And so, man, it's amazing. It is amazing. Now, I will tell you, Belleville, New Jersey. Delia, it's good to hear from you. All right. Oh, Willie, we can help with that. Don't worry, Willie, we can help with that. CreditWiz at investorpro.org. Absolutely. We can definitely help you out with that. All right. Don't worry about that. Dwayne with a question. Here we go. If you have a merchant account, and I can speak on that, Dwayne. Okay, merchant account if you want to know more. Okay. Merchant account. If you have a merchant account with PayPal through your business account, can you get a business loan? Now I can answer that. Should I share and collaborate with the know-it-alls in business credit, huh? The wise guys. Should I collaborate with the wise guys on that?
That will get covered tonight. Not necessarily PayPal, but merchant account financing.
Yeah, merchant account financing will definitely get covered tonight, and I think you're gonna be shocked, Dwayne, at what can happen with your merchant accounts.
But yeah, you can definitely get it.
They definitely, yeah, but you can definitely get it. Short answer, absolutely, Dwayne, absolutely. Good question. Good question. Salute the Jen says they definitely will help. Just get connected ASAP. And that's true. That's true. Get connected ASAP. ASAP. As soon as possible. It's better to do it now and get started now and get started right away. That way you start the year off fresh with a business credit profile. You start the year off with a DUNS number, okay, that you didn't have to pay an enormous amount for, right? You start the year off correctly, all right? Absolutely. Any more questions, please? Someone asked me a question today about velocity banking. I see you right in the neighborhood, Belleville, New Jersey. Yep, that's right. He is right in the neighborhood, isn't he? Sugar snap. So just let me know, guys, all right? Oh, don't worry about it. Eating's important. Now, how many of you know that these business credit advisors, they will check up on you all the time? They will check up on you, and you're just waking up, right? You're just waking up, or, about to eat your breakfast, and then all of a sudden, what? Huh? Because we want you to get business credit. We're serious when we say we call you, all right? So don't get mad. Don't get mad. We're going to call. We're going to check up on you. We're going to follow up. All right? We mean what we say. You trying to fly in for a consult? Oh, man, you want to fly in? Hey, you can fly in. Or we can do a Zoom. Okay? Or you can even do the email thing. We can do a consult. CreditWiz@investorpro.org. Good evening. Junior, man, these are some good questions. Dwayne, that was a good question. I think we're even going to go over some revenue financing, right? We're going to revenue financing tonight or not? Yeah, a little bit of revenue financing. Absolutely.
Yeah, definitely.
Perfect. Awesome. Yeah, don't be afraid. Ask those questions. We've got the answers, right? Perfect. So, the 3 C's of lending. I know there's going to be more, right? But what are they? I dare you to name just one of them. I know Miss Janice can name at least one of them. I know Sugar Snap, they can too. I know a lot of you. Dwayne can name them. I know Salute the Jen can name them. Absolutely. Junior, you can definitely name them, can't you? Kay from Youngstown, Ohio. Listen, I'm from Dayton, Ohio. You can definitely name them, can't you? So one of them is going to be cash flow, right? And then there's going to be some more, but we're going to go over that shortly, all right? We are almost ready, folks. We're going to be showing you what it is, how to get direct funding. And Junior, what do you want to talk about? Let's talk about those business lines of credit. They are the kings. I'm right there with you. Listen, we're going to hop right into it right now, okay? Direct funding, business finance. If you have any questions, don't hesitate. Let's go ahead and get this started, all right? So, folks, without any more hesitation, look, Joseph Smith and Ray Fleming, serial entrepreneurs, real estate investors, successful in their field. Now they're translating that success over into the business credit world and business financing. I want you to pay real close attention. And if I haven't said it before, please get a pen, a pad, and take copious notes because we're going to shoot a lot of information at you at a kind of a rapid pace. All right. So get ready, get set, let's go. Joseph Smith, let's show us how to get the direct funding that we're needing, okay?
All right, thanks, CJ.
Thank you so much, man. I
Really
appreciate
appreciate
it.
it. All right, great. Well, hello, YouTube. Can you all see me? Can you all hear me?
Sure can.
CJ, thanks for having the Wise Guys and Ties back. So last week we talked about building business credit that was separate from your EIN. Separate from your social security number, meaning we build it on your EIN. Today, we're really going to be going over a lot of different types of funding programs that are out there for you, for your business. We're going to talk about some that require a personal guarantee. We're going to talk about others that don't. Most of the things we're going to talk about don't require a personal guarantee. But I'm really excited. We're going to talk a lot today about the C's of lending. Just to kind of get you up to speed in case some of you are like, who is this guy? My name is Joseph Smith. I'm a real estate investor in Arizona. I have multiple companies that build business credit. My specialty is I raise capital. I do a lot of financing. I've raised over $700,000 in the last 6 months for purchasing properties. My business partner who's coming up right after me, he's the guy I give the money to and he spends it and buys, I don't know, duplexes, triplexes, whatever it is that he's wanting to do that day. But anyway, so we do all kinds of real estate investing, but along the way in our journey, we had to actually figure out how to get money. I mean, that's probably where you're at. Regardless if you're in real estate or not, you're like, how does my business get the money that it needs? Well, for me, my background back in '08, when everything crashed, I went through a couple of foreclosures and I also went through a bankruptcy. So I was devastated. I can't build any credit on my personal, with my credit score, with everything being the way that it is. I had to reinvent myself. I had to get educated. I had to learn how to do this. And I'm so excited because I've been very blessed to have the success that we've had. We help people save money on their taxes. We help people learn how to start businesses, how to do what we call mortgage acceleration or velocity banking. We've helped people start businesses, do business credit, invest in real estate, but it all stems from getting educated and learning how to do this. And so part of my act of being grateful is to give back, because I used to be where a lot of you probably are, trying to start out and figuring out what's what. So tonight I'm going to try to help take you through this. So let's talk about first, we're talking about business. We're talking about the world of business finance. So we're going to talk about some C's here, right? Now probably you think you know what I'm talking about, but we're going to start talking about something that's really important. Character. Character. Now what's that mean? Character is so important when it comes to business. It means, are you a reliable? Is what you're putting down, when you put down, my business address is at P.O. Box 1234. Is that really where your business is located? If you say that that's where it is on your documentation with the Secretary of State, but at your bank you give another address, and then still yet with the
IRS.
The IRS, thank you, CJ. With the IRS, you still have another address. We now have a character issue. Are you committing fraud? Ooh. Now, most people aren't out there trying to commit fraud. There are some bad apples out there, and they spoil it for the whole bunch. But the character issue is, does everything match? So we're going to be talking to you about a lot of stuff. But all of this stems from, did you get all your ducks in a row? So if you were with us last week, we laid out, or at least Ray did, he laid out everything that you need to do, everything that you need to have done before. So we're going to assume that you've already taken care of all this. Yes, you've got your business incorporated, you've got your business license, you've got all of these and your address and your phone number matches. On your website, it all matches. Everything with, maybe you have multiple bank accounts. Well, at each bank, is your address the same, right? all of these things, your phone number, fax numbers, you need to have all of these already. This needs to be done. Okay, and if any of that doesn't match anywhere, you're going to find that lending and getting rejected for whatever you're applying for and not understanding why, if you hear a response, a generic response like unable to verify business, well, that's their way of saying we think there's a character issue with your company, right? You need to go back and check all your documents very carefully. Is one address, maybe it's the same address, but you didn't see that on one document it says road when it's supposed to say avenue. Right? We've seen that upset businesses, true story. So we're talking about character. Have good character. Say if your business model is you sell real estate, right? But you tell everybody that I do business development, there's going to be an issue there. They're going to say there's a character issue because you're not doing what you say you do. And how are they going to find that out? Well, they're going to look at you online, right? They're going to look at any website that you have, any previous websites that you've had. Keep that in mind. Maybe you had an old website, they'll find it, right? Make sure everything that you do is congruous. All right, so we're talking about character. Character is so important, but then a lot of people get messed up on this one. Capacity. People are like, wait a minute, I thought the 3 C's were something else. We're talking about 5 C's, so I'm just getting into start. Capacity. Do you have the ability to pay back the loan? That is primarily what the lender wants to know. First of all, they want to know that you're not a fraud or a cheat. And the second thing they want to know is, can you pay them back? That's what all the verification is all about. So your capacity to pay back, it stems from a lot of things. You have 1 out of 5 businesses fail in their first year. Obviously, they didn't have the ability, the capacity to pay them back. There's a lot of things that happen where it's very difficult for businesses to succeed. And there are a lot of reasons why banks won't lend is because they know those sad statistics. So capacity a lot of times gets related in lending to, have you been in business long enough? Right? Have you been in business for a year, 2 years, 3 years, 5 years? A lot of lenders have a different that you'll pay them back. Well, that's great if you've been in business for a while, but do we have anybody on the line here who's a startup? You haven't even started up, and you're like, wait a minute, capacity, I can't get funding if I haven't been around for 5 years? No, we're going to cover some ways that there's even financing for startups, but we have to make sure that we show that we have the capacity to pay back. How do we do that? Well, we have a program, I'm sure many on this YouTube channel have heard about it, a business credit builder program that we use to help people within 6 to 12 months establish a perfect business credit rating. How do we do that? We get you trade accounts, vendor accounts, store revolving accounts, fuel cards, fleet cards, all the way up to high limit, unsecured credit cards, which is the goal that everybody wants. But what we do is we're setting up a minimum of 14 accounts, and you're making small little purchases, but you're paying them off every month. You're establishing a track record that you pay your bills on time, right? Capacity, pay your bills on time every time, and you will show that you have the capacity that the banks are looking for. That's all they want. Give them a warm, fuzzy blanket that they can wrap themselves up in and feel good lending to you. Your business needs to have character. Your business needs to have the capacity to pay back. And now, all right, we need to talk about the next C, which is what? We're going to be talking about credit. We're going to talk about a lot, but we all know credit. Credit's so important. We get credit. Credit. Well, first of all, let me back up. Before we get into credit, I want to write something up here. I want you folks to know. Would you give me the contact information? I want to write our phone number up here and stuff so people can.
Oh, that's a good idea. That is a good idea. Yes. Okay.
Contact information.
While they're doing that, I just want you to know that we are going to get to your questions. Bobby has a great question. I started watching you yesterday. Today I transferred my bills to my credit card. I still need to fix things. Should I wait to build my business credit or work on it at the same time? Bobby, that is not a yes or no question right there. I want to make sure that I get that answer to you. If I don't answer it to you in this video, I definitely want to answer that through email, okay? Creditwiz at investorpro.org. And you might want to write that on the board as well, okay? Creditwiz at investorpro.org. I was talking to a gentleman today. It was only supposed to be a 30-minute phone call, turned into a 45-minute phone call. I needed to make sure that his spreadsheet was correct, that he knew exactly what I was talking about when it comes to the velocity banking method. He also wants to venture into and has already started a real estate investing enterprise as well. Wanted to make sure he understood that as well. So we kind of went over the time, but that's okay. These were relevant questions. Every one of your questions are important to me. Okay. So Bobby, I haven't forgot about you. Ambrose, I haven't forgot about you. I see your question. Okay. Absolutely. What's the best way to get out? We're going to answer those. All right. And Junior is helping us out here. He says, structured right. Junior, you're right. You got to structure it correctly. And of course, we help with that as well. Okay. Creditwiz at investorpro.org, as they are writing that on the board as well. Creditwiz at investorpro.org, folks. Okay. Yes, you do, Willie. Yes, you do. That's right. So please, please. Hey, thanks a lot, Timothy.
Creditwiz.
Thank you so much. That's right. WIZ at investorpro.org. Thank you so much. So we wanted to let you know.
They can also email us at biz.
Because we know you got questions here beyond the video as well, okay? And that's okay. We welcome all of the questions. Perfect. Perfect.
All right.
Joseph, that was a good idea. Thank you.
I just want we'll try and leave this part, right here open.
Okay. Perfect. Perfect.
All right. So
you just get into the good stuff, Tony.
So
here we go.
Here's what I wanted to say by putting this up here. Okay. Because we're going to jump in to direct financing, which assumes that you are already going to have credit. Whether you have great personal credit or great business credit, we're going to start talking about what you can do with that. Now, if you're sitting there like, well, I don't have that. Well, that's why we have a Biz Credit Builder program. And I want you to know that it's our regular price for one-time purchase is $2,997. But for the YouTube special offer that we're doing to the end of this month, right, is right here, 2019. We want you to go strong in 2019. And so we're going to be able to get you your business credit. Now, here's the deal, or here's the guarantee. We guarantee that in 6 months, we're going to have a perfect business credit rating for you, as well as $50,000 in lines of credit. That's 6 to 12 months. Yes. I'm telling you, invest in your business now, especially if you want creditors and lenders to invest in you. Make the investment first yourself. Make your business, make your future plans, your goals, your dreams a reality. Now, if you want to do that, you can call us here. We have the phone number. This is our website. Here's CJ's website, and then you can also email us here. Now, we're going to start talking about credit. Okay.
So we had character, capacity, credit, then we're going to the fourth C.
All right, and once I get through talking about credit, I'll take questions on these three, and then I'll have Ray finish us up with the last two. All right, so credit-based financing. This is what we're talking about, credit-based financing. This means that you have one or two or both, a hybrid kind of option here. You either have good personal credit and can give your business a personal guarantee, or you know somebody who has good personal credit, can give the personal guarantee. And what can you do with that? Personal, obviously with a good personal credit, you can get credit cards in your personal name. But you can also get credit cards in your business name with a good personal guarantee. Now, what this usually, we call it credit card stacking. We also have different types of financing options. Let me think. So,
Now,
okay.
folks, remember, when it comes to business credit, remember, what is the factor that affects the score? There's only one factor.
Could you stand for that?
Yeah. Let me stand out here.
I'd rather do that.
Is that better?
Yeah, that would be.
There we go. You can breathe now, can't you?
Yeah.
Oh, there we go.
We're just right on top of it. Okay.
Okay.
So here's
Beautiful.
where we're at. Here's what you need. Okay, if you're going to give a personal guarantee for your business based off of your personal credit, which means this reports, right? They're going to do a credit check. It's going to count in terms. They're going to be looking at several different factors, right? What's your utilization? How many inquiries do you have? All of these things. You need to have a 650 or better credit score, right? This is just called standard credit, right? Just to get a credit card, right? You need to have 680 or better scores to get unsecured business credit cards. Okay, so what are we talking about here? On the personal side, if you just want to get a credit card for yourself, you need to have a 650 or better credit score, right? If you want to get a credit card using your personal guarantee, right, for your business, you can have a 680 or better. And what happens when you get with that? You get 0%. You get 0% interest probably for somewhere between 6 to 24 months. It just depends, right? So with the unsecured personal credit cards, you've got the approval amounts. Hey, what can we get? Right? This is important. You can get anywhere from $10,000 all the way up to $150,000. Right? That's what's so important. See, the approvals end up being about 5 times greater than what the highest limit that you have. So if $10,000 is your highest limit, what does that mean you can get?
What does that mean you can get? There you go.
Mm-hmm.
Don't be afraid. Answer right up. 10,000?
Right.
Perfect.
So if you have a $10,000 limit on the personal side, it means you can get a $50,000 card. Now, because we do what's called credit card stacking, imagine getting that 5 times now, right? We're talking about up to $250,000. That's what's possible. Now, there's a lot of factors that go into it. What's your utilization at? Are your cards maxed out? Do you have how many inquiries do you have on your personal credit over the last 6 months? Right, that's key. Okay, so we need to have our utilizations really low. I mean, in fact, ideally we'd like to be using less than 30% of our available balance. If we don't, if we can't achieve that goal, then at least we want to have less than 50, right? At a minimum. So again, there's a lot. This is all going to be reported on your consumer reports. So that means it's going to show up on Equifax, TransUnion, Experian. But the way this is done is it's called credit card stacking. So there's 5 different banks that we are going to apply to, and they're all going to compete. So they're all going to try and have the lowest rate with the highest available limit for you, because they want to be the one that you're using. They want to make the money. So by applying for 5 all at the same time gives us the most that we can get, and we have to do it all at the same time. It's a common, like a lot of people, when we talk about doing this for folks and helping them with it, people are like, hey, I can get that. There's so many different programs. There are literally so many different programs, and the ones that are advertised are typically not the ones you want. You need to know how to find the cards that are not advertised, because see, what we want to do is help you find the cards that you can give the personal guarantee on, but they don't report on the personal side. They only report on the business side. So those are the optimum cards to apply for, but a lot of people don't know how to find it. And so after you apply and you get several inquiries already ran just for applying for one card, you've already hurt yourself for your ability to apply for your next card. Whereas we have a system that we do where it's called stacking, because we're going to apply for all of these cards right at the same time. Boom, 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 boom. All right, so we're going to be able to use that fresh, the best score that you have with the lowest inquiries all at the same time. It's a system that we use with our loan officers. They're great at it. We have a complex algorithm that tracks the approval trends of the different banks, so we know based off of what your credit profile is how to line you up with the right lender that's going to give you the terms that are most desirable, while at the same time maximizing the total amount of funds that you can get access to. All right, so what does that all cost? Of course, well, there's obviously no upfront charges for any of that, but there's what's called anywhere from in the industry a 10 to 12%, excuse me, success-based fee. Now, what's that mean? That means that if they go out and they find you $100,000, that their fee is going to be built into that. So you might get $100,000 worth of lines of credit on. So there's credit cards, right? Those are different types of lines of credit. Then there's actual lines of credit where there's no real card per se. It's like you just can pull the money out at a low interest rate. And then there's loans. These are the different types of products. So specifically, we're talking about credit cards here, okay? And so what'll happen is with the fee, say they find you $100,000 in credit cards. Well, there's going to be a $10,000 fee that you'll have to put on the balance of one of these 0% interest cards, and you'll just work that into how you pay that down. Now, the goal is here to have good personal credit. Maybe you don't, right? It's okay to have what we call in this industry angel investors. Some people call them venture capitalists, right? You need, if there's somebody, family member, a friend, or maybe there's some person you've met out there that's willing to take a shot on you, right, and put their good name on the line, you can get a personal guarantee. Now, here's the cool thing about it, is if you're building business credit with us on the business credit builder side, right, where we're talking about that up here, if you're building business credit with us, you can get access to these lines of credit and build your business credit at the same time. Then in 6 to 12 months, this is something a lot of people don't realize, we can do a reevaluation of your account. You can have your account reevaluated and have the personal guarantee removed. There's a specific way to actually do this. And so we do have a lot of people that start off where they don't have any business credit, so they have to use the personal guarantee. Then we get them the cards, and then they start using it. And they use our system to build business credit. In 6 to 12 months, they've got their 80 to 100 Paydex rating, which is what we need. Then we go and we do this reassessment on all of those cards. And through the reassessment process, we're able to reapply for the card without needing the personal guarantee anymore. Beautiful. It's a beautiful process. Beautiful. So you do need to put your personal guarantee, but it doesn't have to be for life.
Right.
I mean, how many people out there have somebody, a friend, actually, I'll tell you this, the statistic is, and comes from the I think it's the Bureau of Labor and Statistics, thank you. 75% of all businesses are financed by someone that they know, a family member, a relative, a friend. 75% of all businesses are funded that way. And that's a tough conversation to have. Hey, my business is Monday. You want to help me out? And we need 50,000, 100,000, 200,000. I mean, where's that money come from? Well, usually someone will dip into their stocks, their money market accounts, their retirement, whatever it is, and they'll pull that money out. In this scenario, someone's able to give a personal guarantee. And as we're going to talk to you about, if we can find you the right program where it doesn't even have to report on their credit. This is part, now their personal guarantee, what does that mean? It means if you default, if you can't pay, right? If you go into bankruptcy and they can't get their money back, then they're going to go after the person who's put the personal guarantee down. So depending on what collateral you have or how, you know your business, you know your dream, how hard are you going to work for this? The personal guarantees that you get today, again, if you do everything right and get your business credit built up, can be removed in 6 to 12 months from now. This is one of the best ways for people to get money, because if you were to go to the bank and you're trying to apply, the bank wants to see that you have cash flow. They want to see that you have credit. They want to see that you have collateral. And when you don't have those, what's going to be done? right? So we're putting some notes here on the board. We're talking about credit. So we're talking about, I mean, what were those numbers? I'll write them on the board in case someone's trying to follow along. We're talking about giving a personal guarantee for amounts that are anywhere from 10K up to what could be as high as 150K, right? Right. This is what we're talking about. Okay, these limits are based off of, right, 5 times whatever your highest limit is, right? Whatever the highest limit you have on your current personal credit card, right? What are the terms going to be? We're talking about 0% for anywhere from 6 to 18 months. Well, actually, we do have some. We do have some that go as high as 24 months. Now, here's a game that some people play. Some people play the game. All right, I got this 0% card, and now I'm going to jump to the next 0% card. I'm going to transfer the balances. Okay, banks catch on to that pretty quick, and then they stop making offers. So how do you not do that? Here's what you need to do. Once your 0%'s over, it's going to revert to anywhere from 5 to 25%. And while that's not fun to pay the interest, keep in mind you were using the bank's money to make money. So as a thank you, keep using the card. Also, it helps your reputation. You don't want to get a reputation as a business that's always looking for the 0% card, because that's the fastest way to get those 0% offers to go away and never come back. All right, so keep using the cards, but as the next 0% card comes your way, yeah, you might use that way more, but make sure you're still throwing a bone and thank you to the banks that helped you on the last 0% card. All right. Now, again, this is done, not only is this five times, or I should put maybe 5 times this way. Right, this is done 5 times over 5 cards. Right? What does that do? That creates competition. Right? We want the banks competing, right? The different credit card companies. No, we want you using our card. Because even at 0% interest, the banks are making a 3% merchant fee every time you use it. So they want you to using their card, because the more you use your card to run your business, even though they're not making right now any money off of you, they can make money on every 3% on every transaction. So they're going to compete for that, right? So this is a beautiful situation for your business. Now, this is when you use a personal guarantee. And now, see here, again, remember I said there's different kinds of cards. Most people will go out there and you can find the cards that you can give the personal guarantee on that report on your personal credit and may or may not report on the business credit. We can do the same thing here, right? There's a whole nother program where we apply for lines of credit, right? Credit cards, and then there's lines of credit as well. But we can get credit cards where you apply, and it's definitely this. Oh, what type of credit score rating were we looking for? Do you remember for this? 650 or better, right, on the personal side. Remember that?
Oh yeah.
Okay, well, this is for cards that are going to report, right? It's going to report on your personal side. What about if you could get a personal guarantee and you found somebody with a 680 or better credit score? All right. Now we can get the same kind of terms that we're talking about, but now we're looking at 5 times, even as high as 8 times, all the way up to 8 times, which is phenomenal. And this is going to be in hybrids. These are credit cards as well as lines of credit. And what do I mean by that? If you have a credit card and you want to get cash out of it right now, what happens? Let's say your percentage is 5%, but you want to pull money out of the card right now. Shoot me the answer. What are people saying online?
There we go.
What happens? What are they going to charge you for that?
What happens? What are they going to charge you, folks? What are they going to charge you? Maybe repeat the question for him.
if I get a credit card, whatever credit card it is, and I want to pull cash out, I want money out of my credit card, what am I going to get charged?
Because what is that called? What's that called? Cash advance, right?
Mm-hmm.
All right. So you're going to get charged that, aren't you? That fee for taking the money out. There you go, Anais. Cesar says 3%.
No, not 3%.
Lanny says 29%.
Yes. You're going to get anywhere from 25
Good job, Cesar.
up to 33, 35. I've heard of as 36, right? It goes pretty high, depending on...
I like Nisi's answer a lot.
That's right. So, hybrid card is a card, so you can use it as a credit card, but it's also a line of credit. So if you have the card
36%.
at 0% interest,
there you go. You're all right. That's good.
3%. Here's what can happen. You can pull money out, and it's not a cash advance. It's a line of credit. So you could still have the 0%, or you could still have it at 5%, right? Pull the cash out. Now, how do we get that? Well, we still have the personal guarantee. But again, the programs that we use, the banks that we work with, the cards that we use, allow for the personal guarantee only. So the credit check is done, but then all the reporting is on the business side. Yes, that's where nothing on the personal side. Because if someone gives a personal guarantee, a lot of people are like, well, I don't know if I want to do that because that's going to throw off my own utilization scores. That's going to throw off my credit rating. No, that's the beauty of it. You can give a personal guarantee, and that might put 5 inquiries on the account. And so that will have a negative impact to the score for a few months, but that's it. As you use the cards, you might get the cards and you might fill them up. As long as you have the ability, the capacity to make sure that you pay back everything that you spend, you could max the card out, you could go over 50% utilization, and it will not affect the personal guarantor. That's what's great about these hybrid accounts, right? Very important. And again, we're talking about once the 6 to 24 months is over, then you're looking at getting anywhere from 5 to 25. And that's going to be based off of your capacity. Did you pay everything back? Did you pay everything back on time? Did you pay everything back early? This is something that I try to teach. I teach CJ this. I teach everybody I work with. To pay early is to pay on time, right? To pay on time actually means to pay late. And it's something that you use in life. I always endeavor to show up early, because to be early is to be on time. So if you wait to the last day to make your payment, even if you phone it in, there is a chance, because of wherever you're at, East Coast, or maybe they're going off of some kind of meridian, post-meridian date time, whatever it is, your payment might not process on this day. And that would be devastating, to be 1 day late, because to be 1 day late on a business credit card, there's no grace. There is no grace. So on the personal side, if you're a day late, no problem. There's usually a 30-day grace period. Business credit, that's gone. That's removed. You pay everything early, or you pay on time, and you can keep a good business credit rating.
Perfect.
1 day late, and you've just ruined it. You've ruined your business's ability to build business credit, right? Let's not do that. Okay. So again, with all of these, I was talking about, right? What does this cost? There's anywhere from a 10 to 12% what's called success.
Hey, didn't Sugar Free say that?
Success-based.
That's good, Salute to Jen. Very good.
Fee. A success-based fee. The success for our team, our loan officers, for finding you all of this money. And there's so many people, and maybe you're one of them thinking, I can do this myself. I don't need you to help find it. I know I can go out and find that card. I'm sure you could find 1, maybe 2, maybe 3. But can you get 5? And can you get 5 cards that will not report on the personal side? And can you get 5 cards that will only report on the business side? Right? That is the key. Can you get those hybrid accounts that allow you to also pull money out as a line of credit and not as a cash advance? That's the challenge that most of our people They just can't do. They think a good, yeah, I see offers. They're in my email box. I see them online. I see all these. Yeah, the banks are always going to advertise you what looks like a good deal for you, but is always the best deal for them. You need loan officers that can go in and fight for the best rates and the best terms, right? They don't really go into a lot of detail. The terms are all like, and I've heard it said this way: the large print giveth, and the small print taketh away, right? You need to make sure that you have somebody who knows the small print and the underwriting guidelines of every single program that's out there and fights for you and gets you what you're looking for. And that 10 to 12%, that's pennies compared. 10% of $250,000 might seem like a lot of money, but don't forget that you have a credit line of $250,000. All right, your business is going to be able to. What is your business going to be able to do with those lines of credit? Now, here's another thing that I'm excited about. On your personal side, if this was credit on your personal side and you max that out, your credit score would tank, right? Your utilization ratios would be off the charts. You could get no credit. On the business side, that's seen as a good thing. Apply for as many cards as you want. Inquiries don't count against you. Use your full limit of your card if you need to, as long as you can pay it. I don't want anybody doing anything irresponsible here, right? We all need to be good stewards of what God gives us. We need to pay back. We need to be men and women of our word and pay back, all right? So, and I love our country that we're in because there's so many opportunities and there is so much that's out there that helps us to succeed. This program right here that you're listening to on YouTube with CJ is one of those. It's one of the beauties of this country that there are people that are entrepreneurs whose sole business, CJ's whole business model is, how can I help other people succeed? I love working with people like that because a rising tide raises all boats, right? So this is such a great program. I love it. I can't say enough about this. This is for startups. We're going to cover so many different types of financing tonight that are incumbent upon you already having something set up in your business, right? You need cash flow or you need to have assets. This right here works as a startup. You don't have to have anything, but do you have the personal credit or do you know somebody who has the personal credit? There's so many ways that we mitigate the risk for them because we find the programs that just have them on the hook if you default. That's it. And it does not impact their personal credit in terms of utilization or the inquiries, yes. The inquiries are going to be there, but not the utilization, which is utilization would hurt anybody's credit. As soon as you maxed out or spent more than 50% on a card, you would throw off the person who had the personal guarantee. You throw off their whole credit score rating. And there's a lot of people who have good credit score ratings and they don't want to see that hurt. So here you have an opportunity. You have somebody out there and maybe they want to help you out, but now you don't have to ask them for money. You can ask them for a personal guarantee and you can show them, right? If you can't show them, talk with me and my loan officers and we can show them how that this personal guarantee will only put them on the hook if the business goes into bankruptcy. Okay, that's it. So as long as the business is solvent, the business is making money, the business can pay for what it gets, then we're good. And I get this question a lot too. Well, wait a minute. I have a good personal guarantee. Can I guarantee more than one business? Yes, you can. Here's the beauty of the system. It's all based on inquiries. So what does that mean? Well, they're always going to look at how many inquiries do you have over a 6-month period of time. To qualify for this, the person is not only going to need to have all of this up here. Remember, we need low utilization, right? We need low utilization. What else do we need? We need a credit score of 680 or better. 700, 800. That's beautiful. But what else do we need? We need 4 to 6 inquiries in the last 6 months. Right? So if you come to somebody and they have a great, say a 680 credit score, but they have 15 inquiries in the last 6 months, that's not going to work, right? So utilization. What does low utilization mean? It means we need to be below 50%. And 30% or below, that's ideal. Okay? 4 to 6 inquiries in the last 6 months. Now, what if you come across somebody and they have 50% utilization, they have 680 credit score, and maybe they have 10 inquiries in the last 6 months? Does that mean you can't get it? No, you can still get credit. It just means that you're not going to be here. You'll get less. Maybe you'll qualify for 50,000 as opposed to, let's say somebody has below 30% utilization, they have a 750 credit score, and they have less than 4 inquiries. Well, that person's going to get the 150. Okay, that's all that means. So that's why we have a range here. What's the range for? It's based off of what the person with the personal guarantee has. So the stronger that credit profile, the more money you can get.
Jay asks, 50% and below utilization overall, or below 50% utilization on each credit card individually?
Boom.
Great question, Jay.
The second
Great
one.
question.
That's a great question. Per card. That is so key. Because
per card.
I mean, think about it. If it's like, hey, I have great relationships with all these people. All these people get along, but then there's this other person, and I'm killing them, and I'm beating them. Mm-hmm. Am I a good person? No. Right?
Okay, per card.
Right? It's per card. So what do you do?
Hashtag per card.
Well, okay. So here's what's great. All right. When we have people that are in that situation, because sometimes you might not know. Maybe it's not you. Maybe it's somebody else. And they apply and they're like, oh, your utilization ratios are perfect on these 5 cards, but the 6th card that you have, you're maxed out.
Perfect.
We can't help you. But guess what? It's okay, because we have something that's called rapid rescore. Oh, this is so cool, because this is a new type of thing. And what is rapid rescore?
Perfect.
The lenders that we're going to help you with. So we have a problem here, but you have these other credit cards. Let's transfer some balances. Let's even some things out. Let's get all of the ratios below 50%, and then we can do a rapid rescore. So in the world of business finance, when you apply and you get your credit rating wherever you're at, and the lender's looking at you, whatever your score is, whatever your strengths, whatever your weaknesses are, that's really all that they can work with for the next 3 months. And some lenders might have, depending on the different banks that are out there, there are some different schemes. There are people that don't follow the same rules, like Amex. And so you got to know what each system is. There's some people that can rescore you in 30 days, right? So that's the best case scenario that's out there is, oh, well, you didn't do well, come back in 30 days and we'll rescore you. Most people out there, you have to wait 3 months to get. Now, with what rapid rescore is, with the lenders that we're talking about, if you're not where you're at, we can rescore you within like 2 weeks. Go and fix this. 2 weeks, we can get you rescored and then put your application through. Man, how cool is that?
That's super cool.
So this program is so critical. So what if somebody's like, you know what? I don't need you to build my business credit. I already have great business credit, or I already have personal credit. We'll skip this then. If you don't have business credit, you need it. So we're going to get that for you for $2,019. But what if you're like, you know what? I don't need that. I don't need that service. All I need is, I want those cards. I want to get 5 credit cards, right? Hey, thanks, Ray. I want to get 5 credit cards where maybe I can get anywhere from, I don't know where you're going to fall on the spectrum. Maybe you're at, like, Ray, didn't we just get a guy yesterday, 85,000?
Yes, sir.
That was exciting. That's exciting.
Yeah, 85,000 in 2 weeks.
Yeah, it took 2 weeks, but he didn't have all of this together, right? He was kind of middle of the road.
Yeah.
I mean, he had some strengths, but so he fell right at 85,000 in that spectrum, and that's over 5 cards. Actually, I think he got 6 cards. How cool is that? So, and so what did that also mean? That meant that because he got $85,000, that his success-based fee ended up being $8,492 or something like that. Not that I was keeping track. Actually, yeah, I was keeping track. So it was like 9.9% was the success-based fee. But he's totally happy because that got taken care of in 2 weeks. I'd imagine applying to all these different banks and all the hoops that they're going to make you jump through, and you're at the mercy and the whim of let's check and see what the underwriters say. And then you call back, oh yeah, I'm sorry, you were working with Tom. He's now over in accounting and right? We just bypass all the bankers and loan officers, and we just go straight to working with the underwriters, with these lenders, right? It's a direct pipeline, and we do it fast.
Awesome.
All right, so what questions do we have on this? This is giving a personal guarantee. Are we good? Because we've got a lot to cover here.
Oh, yeah.
I want to get going.
We want to look up the questions right now. Hybrid accounts, are they for the personal score ranges? The hybrid cards you were talking about.
Hybrid accounts don't work for the individual, but the individual can give a personal guarantee for a corporate card that is hybrid in that it can be a credit card and a line of credit at the same time for the business. All right. Now, those are going to report on the business side.
Okay.
Right? Okay, good question.
Awesome.
Now, we talked about if you already have business credit or you want to bypass the business credit and you just need funding now and you want to give the personal guarantee, or you already have lined up your angel investor, you can start working with us tonight, right? At no cost. We'll plug you into the system and we'll start, we'll collect your information tonight if you want to start working tonight, or schedule an appointment with us tomorrow morning, and you can start working with our loan officers, and we'll start showing you what we can get. Before you've even committed or signed any papers, or before anybody has signed anything, what you can do is just find out what can we do for you. That is no cost to you to see what we can do for you. All right?
I like what Nigel said. He said, I max one out and pay it off early in a velocity banking method. Nigel, connect with us, creditwiz@investorpro.org. We want to get you started on this right away. creditwiz@investorpro.org. That's the right mindset.
Oh man, CJ, if these folks could just, a lot of people want to do velocity banking, and velocity banking is totally cool.
Yes.
But you know me, I'm different. I come at this from a different perspective than you. See, I think you need business credit first, and then the second step is velocity banking. Imagine being able to, let's say you live in a house, have your business credit set up, and you get these lines of credit, then you can give yourself a loan from your business. How do you secure that? Maybe you put a lien on your house. Or if you don't own your house, maybe put a lien on the car, whatever it is. But then you can extend a loan to your personal side, and then pay off whatever you need to pay off with that loan. Then your personal side and your business income, use velocity banking to pay that down, which will also have the effect of eliminating debt on the personal side while at the same time growing your business credit. So you're killing two birds with one stone. So a lot of people I talk to like to, I'm just going to do velocity banking and get rid of my debt. That's great. That means you're in the hole and you're so deep in debt that your whole goal is, I just want to get to zero, right? It's like, no. I want your goal to be, bam, I want to shoot for the stars, man. So let's get business credit and let's get some positive cash flow. Let's get a business. Let's say you're just in business to create, financial security, maybe create benefits for yourself. We can show you how to set up HSA accounts or self-directed IRAs that you can use to invest in, I don't know, let's say real estate. But here's the thing, we start a business and we use the business to improve your personal credit, all right? While at the same time that's increasing your business credit, your lines, you can expand your lines of credit, you can grow this credit. Just because you start at say 50,000 doesn't mean 2 years from now you can't expand it to 200,000, right? As long as you're paying your bills on time, every 6 months you can call them up and say, I'd like to get a limit increase. If you've got the history over 6 months to show that you're doing great, then they'll give it to you. Okay, so, but here's the great thing. Once you've used your business credit to get velocity banking to improve your personal credit score, what can we do? We can take the personal guarantee now to the business and then double where we're at. Let's say we grew this to up to 150,000, that we use that to improve your personal side. Boom, bring them together, and now with the personal guarantee, you now just jumped up to $300,000, right? Because you went through the business credit side of building your credit up, and you did that on the strength of your EIN to fix the bad credit on the SSN. Now that the SSN is fixed and you've got your credit score over 680, you're ready to now add on top of your business credit a personal guarantee. And then, am I blowing anybody's mind here yet?
Goodness gracious.
What
Wow.
have you done?
Wow.
All right. So obviously some people are like, well, I don't have personal credit. I don't like it. Don't want it. I had a bankruptcy, so my credit actually just died. We have a little grave. We go visit it at the gravesite. I just don't have credit anymore. That's fine. You can build business credit. Again, we were talking about that. For just $2,019 in 6 months, just off of the strength of your own EIN number, we can build $50,000 in lines of credit. So what will we do with that? Then we'll go for corporate cards. We'll skip all these hybrids and personal guarantees, and we'll just go for corporate cards. All of the same rates apply. No personal guarantee is necessary. Right? We're talking about 0% for 6 to 24 months, and then when that's done, you get rates from 5 to 24. But with business credit, keep in mind, like if you paid attention last week, we're talking about a step-by-step approach of building vendor accounts, trade accounts, net 30 accounts. We're talking about store cards, revolving credit, to fuel cards, gas cards, fleet cards, all the way up to unsecured credit cards. Right? That's what we want. We want the Visas and the MasterCards, the American Express. That's a process, right, that we're going to work with. A minimum of 14 accounts that we're going to help build your business with over 6 to 12 months. Once you do that, once you have that in place, you can then start getting direct financing for your business solely on the strength of your EIN number. All right? I also want to talk about another way that a lot of people use their credit to get, well, not just credit. We're going to be talking about another C here. There's another C, which is not up there yet. We're talking credit, but another C that's going to come up that Ray's going to talk to you about is called cash flow financing. Now, some people, they think, I've got to have all of them, but we always try to tell you, no, you can actually get funding just by having one. Right? You don't have to have only credit or only cash flow. We can combine them too. All right? So if we have a business that has some cash flow and we have some credit, we can do what's called peer-to-peer lending. Now, I don't know if you guys have heard of peer-to-peer lending. It's pretty popular, but there's a lot of factors. So they're going to take your consumer credit score into account. They're going to look at your income to debt ratio. So that's really important, but they're also going to look at your revenue and your profit for your business. So let's draw that up for people who are taking notes. So we're moving on. We're not talking about credit cards or lines of credit. We're going to talk about peer-to-peer lending just for a moment. All right.
Peer-to-peer lending. Awesome. Good job, Anais. Thank you. Peer-to-peer lending.
Peer lending. All right. sure our board doesn't fall down. Okay, peer-to-peer lending, all right?
Yes, you can use velocity banking to pay down student loans.
Peer-to-peer lending. Okay, so here's what you need. Here's what they're going to look for right off the bat. They're going to look at your consumer credit. Consumer credit, is that business credit or is that personal credit? Is that EIN or SSN?
All right, so let's go ahead and answer that one. I know you know it. Is it EIN? Just type in the 3 letters. Is it EIN or SSN, the consumer credit? EIN or SSN? SSN. CEO says SSN. Tony says SSN. Perfect.
That's right.
Perfect.
They're also going to look at your...
Cesar says SSN. Kay says SSN. Awesome.
They're also going to look at your income to...
You're right. Nigel says SSN. Good job.
They're going to look at your income to debt ratio.
Salute the Jen says SSN.
All right. Income to debt ratio. And what is the percentage that you have to be under? Anybody remember?
Ooh, now I heard someone said 3 to 9%. The DTI. Right?
Ray, do you remember?
What's the percentage? The percentage.
Do you remember what your DTI
Debt to income
needs to be below?
Someone says 43.
45%.
Someone says 15. Someone says 30. Less than 45%.
Mm-hmm.
Good job, everybody. 20, I think, was the closest. There we go.
All right, and then here's what they want to do. They want to see what's your revenue / profit. Right? That means they're going to want to see P&L statements. Okay?
Perfect.
Now, why are we going over all this? Because you're going to get some great terms. Because the interest rates, here's what the terms are going to be. Here, let's use a different color for the terms. The terms are going to be, so we're going to go over here. What are the terms when it comes to peer-to-peer lending? We're talking about 0.5% all the way up to 10%. Okay? All the way up to, we have some peer-to-peer lending groups that'll go all the way up to half a million. Right? This is really exciting stuff. Now, again, keep in mind you're going to have what's the credit score rating? You know, it's not that bad, right? Here's what they say. They say on the paperwork that they need 625 or better. Okay, but in reality, here's the deal. Here's what we've noticed, that they're approving people for those amounts with 700 credit scores or better. So what else do we need? We need to be in business for a minimum of 1 year. Okay? And when it comes to this revenue, how much do they want to see? They want to see $10,000 a month or more in revenue. Okay? Now, they'll probably ask you for tax returns, right? And again, that's not, I mean, it's, if your tax returns show the profit, then you're good, right? But if you're like, see, there's a lot of businesses out there that are like, hey, I got to maximize all my tax deductions and show that I'm like losing money, all right? If that's you, then this isn't going to work. Now, businesses don't always do that, but businesses in startup mode, they do that for a while, for 5 years, maybe. But ultimately, you want to get here. I was having a conversation with a fellow just yesterday, and it was about taxes. So we're talking about, man, we show some people so many benefits that they get when we're working with their taxes, all these tax write-offs, and some people are like, I don't know what the big deal is. I don't really pay taxes. I get a refund check every month. And I'm like, well, okay, so think about that. When you get a refund check, that means that you're in the bottom, okay? You're part of the people who didn't really pay that much in, and you're getting some kind of, what's that, EIC, Earned Income Credit, right? So that means that the government held on to your money interest-free for a year, and you overpaid your taxes, and they're giving some of it back. But they went and spent it and made money off of it. Here's where you want to get to. Is that that's a poor mentality. That's a poor mindset. Let me give somebody my money and let them hold on to it for a year and then give it back to me without any interest, I mean, that you're losing money. Just with inflation, you've lost money. That money that you could have put to work for you during the year that they were holding it, by the time they return it back to you, you've actually lost somewhere around 3% of your money's value. All right? That's just the math behind it, okay? But here's the thing. Some people are like, oh, I don't want to pay taxes. No, you do want to pay taxes. Here's why. When you pay taxes, what does that mean? It means you made money. It means you're making a profit. If you go and, I mean, some people, you don't want to pay too much in taxes. Don't get me wrong there. But I mean, if you go and you make $100,000 in your business and you do your taxes the right way, paying 15% in taxes, that's not bad. Considering you just made $100,000, you can pay the 15. That's not a problem. You're making money, right? So when you're in startup mode and you're not bringing in those big profits, yeah, you want to try and make sure you get every deduction. You always want to make sure you get every deduction. I'm a firm believer in only paying your fair share, but you shouldn't have to overpay, right? So paying taxes is so critical. That is a sign of success. So if you're getting charged taxes, don't grumble and complain against it. Think about, yes, I'm succeeding. I mean, for a long time, I used to just get my refund checks. And I was living paycheck to paycheck, and I was miserable. I was just in a job. But, oh yeah, I was always excited every like April when my refund check would come in. I was so excited, right? I thought it was like, I've been fooled and duped into the system thinking, wow, I just get all this money from the government. When I learned that no, that's my money. that I overpaid all that time. Now I run a business, and I've been blessed. I've had, in the last couple of years, I've made 86 and 91, in gross revenue, and I get taxed on that. But knowing how to run my business the right way, I pay my taxes, and I'm grateful because the Lord is blessing me. And so I want to encourage you. I know we got off on the sidetrack there, but tax returns. We were talking about that because they might want to see your tax returns. So if you're in startup mode, this might not work for you. But if you're an established business and you can show that you have profits, and it's okay to show profits, yeah, you might have to pay taxes. But what's the opposite? Oh, I don't want to pay taxes. Well, you don't pay taxes and you can't get access to funds. You can't get an SBA loan, you can't get peer-to-peer lending. So it's like, yeah, okay, I'll pay taxes. But yeah, let's say we're going back to that model, $100,000, and you had to pay 15%. You do that, but at the same time, look what you can borrow now. You can get access to in that scenario where you made $100,000, you can get access to $500,000. So what did it really cost you when you paid those taxes? You paid the taxes. You got to understand how the system works. If you're going to make the money and pay the tax, don't feel like you lost. Be grateful you made money, and then go out and use that tax return to show your profitability, and people will give you money. Okay? So that's a good thing. I'm trying to help you see and look at financing a different way. All right? So that's peer-to-peer lending. Questions on that?
Any questions on the peer-to-peer lending? Boy, that was mind-blowing, Joseph. Good job. Here, let me just go ahead and close up there to you. Consumer credit, SSN, income to debt ratio less than 45%, revenue, profit, P&L statement, tax returns.
Now, depending on, you can, so the peer-to-peer lending, there's short-term, and then they do offer some long-term. There are some 30-year loans that they might offer in different situations and circumstances. These are special situations, but we're talking about right now in today's market anywhere from 8 to 15% interest. Now these are loans, so if you've listened to CJ on his velocity banking, there's a difference between amortized, right, and simple interest. But just because amortized interest is expensive money, it doesn't mean that we don't get it, because if we have access to a large sum of money, what good can we do with that? We can do a lot of good, and with the knowledge of velocity banking, we can eliminate that really fast. So that's one of the tools that we have in our arsenal where, yeah, okay, we can go ahead and get a 30-year loan, but we know we're going to have that paid off in less than 10 years. So
Yes.
then, and we'll save, $150,000 in interest. So that's not a problem.
Perfect.
All right. So we've really covered credit. Credit. And this is good stuff. This credit right here, we've talked about personal guarantees. We've talked about getting not just personal guarantees, but we've talked about how to get hybrids where you get a personal guarantee for a credit card that can also double as a line of credit that only reports on the business side. See, that's very important, right? We've talked about corporate cards where you can just use the strength of your EIN number. If you either go through our business credit, where we offer that for $2,019. I mean, I keep repeating that because we're only offering that here on this YouTube channel. You go to our website and it's $3,000. That's what our other clients are paying us. But CJ, you just provide such a great value to the community that I want to thank you and your people. They're some of the best people. I got the opportunity to talk to a lot of them.
Absolutely.
And they're so wonderful. So we want to continue to help them build for a strong 2019. Because imagine you start building business credit today. In the next 30 days, what could you have? Well, I mean, give a testimonial.
Yeah.
What happened for you?
Yeah, I mean,
in just 2 weeks.
In less than 2 weeks, folks. In less than 2 weeks. And how many of you have ever had this happen to you? Okay, on the personal side, all right. Let alone the business side, because they're two different worlds, right? Look, in less than 2 weeks, $3,000 in business lines of credit. Who does that, folks? And you just heard him say, working with a guy, got 85, right, on the direct funding side, 85,000 in, what was that, 2 weeks?
2 weeks. And yeah, he was right at the very bottom, breaking point.
Wow. He was right at the 680.
Wow. So there comes a time in your life and in your business where you're like, you know what? Is it time to be capitalized? You know what I mean?
But he also is in the business credit builder program, so he has the foundational aspect really well set up.
Okay.
Right.
Because that's part of it too. You got to make sure that the character, the capacity is very important.
It's already
Absolutely.
taken care of. You can't jump to these programs that we showed you under credit if you haven't taken care of character and capacity first.
And that's why we show you our emails, creditwiz@investorpro.org. We do a consultation with you. Make sure you're starting out the right way. Okay, that's the website, wiseguysandties.com. bizcredit@wiseguysandties.com as well. Okay, and there's a phone number as well, 888-524-9273. You say, CJ, I'm tired of being broke. My business is almost going to close. There's no money for me. Listen, we got to get your business credit profile built. That's why, folks, okay? We want to do it the right way.
Awesome. Well, CJ, are our folks online liking what we're talking so far? Because we've only covered a third of the content that I had planned for tonight. So there's still 2 more things we got to talk about.
Right. Folks, don't go to bed yet because we are just getting started. Grab those vitamins or whatever you need to take to stay up. We are definitely going to be continuing on because I think the next topic is going to be one of my favorite ones. Is it cash flow financing?
Yeah, we're going to be talking about revenue.
Oh,
okay, so
my word. Okay, awesome.
I have to bring up now my business partner. He's going to talk to you about the final 2 C's of lending. Now, for me, my area is finance, business finance, the world of credit. That's why I spend all this time. But my business partner, who has started several eBay companies, he's had his own kettle corn business. He's had handyman business, a landscaping business. He's had several real estate investing companies. The guy's been involved in network marketing. He's done so many different types of businesses. So he understands business credit, he understands the model, but he's had businesses that have generated lots of revenue. And he's had businesses that have owned lots of collateral, like tools and things like that. So, and company vehicles, things like that. So he understands the different types of lending that's out there, and he's experienced with it, and he's going to share with you how you can gain access to this funding. It's like only like a couple of weeks away if you qualify. So please welcome up to the front of the room, Mr. Ray Fleming.
Thank you, CJ. Here I am, I'm going to call you CJ.
I look like
CJ.
You look exactly like CJ.
We're twin brothers. A lot of people have a hard time telling us apart.
Thank you, Joseph.
You know what
Well,
it
let
is?
me have
It's the
that
glasses. It's the glasses.
It is the glasses. I love you both, so that's why. Cash flow is king, and that's really what it is all about. I love cash flow.
Oh man, me too.
It is the most important thing. We don't get in business to put out money. We want money coming in.
Yes.
And the more we have coming in, the more we can put out. So, we're looking at this from, if you don't need all of these, you know, when you have the trifecta, you know, you have all three, you know, credit, cash flow, collateral, when you have all three, that's when we're going to SBA loans and things like that. We'll cover that in a minute. But these approvals that are just based on cash flow coming into your business. One of the most important aspects of this, and I can't stress this enough, so important, is your banking record. That's what it is. Your banking record is the most important thing on this, because you want to make sure that you have consistent deposits. So money constantly going into your account. They really like to see daily deposits, even if they're, you know, small amounts. They love to see that. They want to see that they can predict what you are actually going to be able to bring in. So positive cash flow is so key. Now this is the big thing. Now you have to be very, very careful. Non-sufficient funds. Cannot have those. Cannot have those. Because every single thing, so everything we talk about, at the end of the day, the lenders want to know what? They want to know, can you pay them back? Really, that's can you pay this loan?
Capacity.
They don't care about anything else except for are they going to get paid? And when you have non-sufficient fund fees on your account, negative balances at the end of the day, you can't even pay your bills, so how could you afford a loan? This is where they're judging you. Remember, every single thing that they ask you for, it's all leading back to that. So when they want a documentation, you better be thinking, what are they looking for? They're looking for your ability to pay them. That's all the things. If you know, they want tax returns, if they want your P&Ls, your profit and loss statements, everything they're looking at, it all goes back to that one simple thing: will they get paid? And I said it really quickly, but positive ending bank balances. That's very, very crucial. Now, some of the financing, they will look at tax returns. So as they're looking at that, it's something to keep in mind. Like Joseph was just talking about, I love tax deductions. I mean, we try to write off every single thing possible, and most businesses are getting savvy enough where they, you know, if you have a decent CPA, they're going to start looking at all that stuff. But this is the thing. They're looking at businesses that, you know, can't even hide the money anymore. You know, you've taken your tax deductions and whatever, but you're making so much money you can't even deduct it all. That's what they love. They love to see that you are showing a profit. And it can kind of hurt sometimes if we're doing so many deductions that we're running into the negative and it looks like we're actually losing money. One, we save money on taxes, but on the other side, lenders don't necessarily like that. So it's kind of which you got to try to figure out what your goals are, your plans are, and what direction. Because without a plan, you're simply just planning to fail. Now, there's pros and cons to every situation, but it just depends on where you're at in the process. And if you're planning on getting some cash flow financing, we'll have to look at pulling it back a little bit on those deductions, just so we show that we're making some money.
There you go.
So increasing the revenues and profits. Increasing revenues and profits. That's the greatest way to do it. You know, they're going to look at, have you been in business 1, 2, or 3 years? And like I keep saying, that you're at a profit and not a loss. That is very, very important as we're going through this whole cash flow thing. So that's what the banks are looking for. Now let's talk about the types of financing that are revolving around cash flow. Now, I'm going to kind of talk about these two together. These are the most common ways of cash flow. There is what we call revenue cash advances. So revenue cash advances, and I'm also going to tie into there your merchant account advances, because those both apply to what we're talking about. This is fast money. This can happen in as little as 3 to 7 days. Now, if you have already gotten set up and you have a track record of getting some of these, I mean, it could be in as quick as 24 hours. So a lot of times people use this for payroll. Maybe it's 2 days before payroll and they're realizing that, oops, all of a sudden something hasn't cleared, payment didn't come in, we need to make payroll. Boom, able to bring the funds in, pay that, and then it's the easiest and quickest way. So no credit score is required, or collateral. So no credit or collateral for this. This is just based on cash flow. Some lenders do not even come close. I mean, they just don't pull credit. Others, they'll go as low as, get this. I mean, on this, if they are going to check your credit, they'll go as low as like 500. If you have over a 500 score, you're fine. I mean, it's really, they're looking at the bank statements. They're looking at your merchant statements. That's really what it is. They're going to want to see your merchant account statements. Now, all that's needed for approval is amazing. 6 months. 6 months bank or merchant statement review. Usually they'll look at both. They're looking for stability. That's what it is. Lenders need stability. They need comfort. That's what we got to give them. So some of these.
Ooh, there's a question.
Yes.
I think this is a very important one. Good job. So there was one person that stated that they are having their paycheck. They're thinking about putting their paycheck within their business bank account. Would that qualify for revenue, or would that qualify? I think that was Tim that said that.
Was that Tim? Timothy?
Yeah, I think it was Timothy that said that.
You know,
good job, Timothy.
Tim, I shot you a response on that because it's very. I'm not a CPA, but we can run into some issues in doing that. But also, you know, you can be funding your business. It's just the way that you're going to actually handle this on your books. This is very important to understand. And also, why you actually want to do that. Now, there might be a little runaround that will work better. That's something that we'll need to talk about. But it really depends on what your goal is. If your business is not making money right now and you're just trying to show or almost try to trick the lenders into seeing it, that they will notice. They will notice. They will look at they'll look at your statements, and if it's looking at like a direct deposit from something, they're going to dig in deeper. Lenders know. Lenders know if you're trying to mimic cash flow by doing something that is not cash flow, they're going to know. People, trust me, lenders, most of what they deal with is fraud. They know what people are trying to do. They know. They really do. It's a great idea, but unfortunately, it wasn't the first time somebody's thought about that. Now, with that, it's kind of it's not the cheapest. It's like 12% this type of funding. What would be ideal for you, Tim, if you're in the situation? That's why I'm saying we got to talk. And if you're in the situation where you're not making enough money, then probably the best way we're going to want to go is unsecured, no personal guaranteed lines of credit. That's where we really want to go. We want to start you in the credit realm and then get you the money that you need to expand, market, expand, grow, produce. Then when you're actually bringing in the revenue, so this is a situation we don't really want to fake it till we make it. We want to bring in the money in a different avenue. then produce, and then go back and get it. That's really what I would recommend, because I've done it that way. I've tried to
buy something from yourself
I,
into your business
I've
bank
tried
account,
it,
have the money.
A lot of stuff. I've tried a lot of stuff, and you know,
Yeah, don't be giving them ideas, Ray.
no, I'm just learn from me. I've done it several ways, and several ways did not work according to plan. And if I had just sat back and looked at what am I trying to accomplish, and that's what's very important. I want to know what you're trying to accomplish with that. And if you're trying to accomplish cash flow financing, you're going to have a hard time with that. But if you're trying to capture funds, we can definitely help you do that. It just isn't going to be this avenue. Remember, there is 27 different ways we look at funding you. We can definitely talk and figure it out. Now, back to revenue cash advances and merchant accounts. These average around 12%, you know, loan amounts average about 12% of your annual revenue. So 12% of what you annually are making. So let's say you're making $120,000 a year, then that's going to be $10,000. That's really what it is. They really want to see that you're having a significant amount. And the reason I say that to Tim was they want to see a lot of money coming in. And just having a paycheck deposit isn't really going to cut it. So with this, there's usually daily paybacks. So once you get set up with a merchant advance or a revenue cash advance, they like to draw money from you daily. So that's one of the downsides, is there's going to be money coming out daily. But on the other side, it's a very quick and easy way to fund it. Sometimes you can actually do weekly or even monthly if you have an established track record. So you really got to get that track record set up with them in order to be able to see that. We keep saying it. They want to know if they can get paid. So it really depends on your risk. And a lot of people look at percentage rates. They're like, oh, well, this is too high of a percentage rate. Maybe it's the wrong product. The thing is, the percentage rate directly correlates to your risk. That's it. If you're not seeing the interest rates that you want to see, you got to reevaluate your business, and you are putting off too high of a risk factor for them. So maybe they're not seeing enough deposits, maybe they're not seeing, you know, stability there, and that is what's causing the increase of interest rates when it comes to the cash flow financing, for sure. Now, these are usually short-term, 6 to 18 months. So let's see, let's put that up there. These are usually 6 to 18 months to start, you know, to start. Once you build a little track record, it can go as high as really like 36 months. But to start, that's where you're looking at. They're going to be a little bit short time. Initially, even shorter. So even initially, you might even just start with like a 3 or even 6 months. Your very first one, they just want to make sure that you can handle it, make sure that there's going to be enough money in there. After you do it one time, then they're going to move you up as they perceive your risk to be a lot lower. Now, something we're going to talk about being in second position on some of these. You can get secondary loans on these, secondary cash lines, but for applying for the merchant cash advances and revenue cash advances, first time you're looking at 3 to 6 month term, you know, averaging around 12% interest rates. As we move forward and pay those back, they're going to start extending the term. So loans typically go all the way up to, pretty much, they can go all the way up to about $500,000. That's where the loans go up to. Most of the time, once you get set up, you start to use these again. I mean, once you get set up, you'll find that they're very convenient, very inexpensive, and a lot of businesses like to use these over and over again. So the risk factors, what are some of these risk factors? Because we talked a little bit about percentage rates. Well, we haven't really talked about percentage rates yet. What are the percentage rates on this? I said about 12%, but really, they can go anywhere from 10 to 65%. And that's what I was really talking about. You know, what is your risk factor? You know, if you're very, very low risk, you're going to be 10, 12%. But some of these things, if you're just starting out, you have very sporadic deposits. There's really a lot of, you're very unstable. Very unstable. We can still get you the funding, because that's the cool thing about this is no matter where you are, I love when the interest rates are all across the board, because it's an option for everybody.
Yes.
If you're very low risk and have a long-term stability, you're going to have a very low rate. But if you're very, very high risk, very unstable, we can still get you the money. It's just going to cost a lot more because of the risk. But it allows for everybody in wherever they're at, as long as you're making money, to get money. Because a lot of times, this is kind of the make or break it thing. Are you willing to pay 50% if that's going to make the difference between your business taking off or crashing, burning? I would do it. It's a calculated risk. Every situation is unique to itself. So it really is something that you have to think about. But when it's your last option and that's your only option, then we got to do it. But of course, our Business Credit Builder program helps you build business credit lines without using a personal guarantee. So there's so many different options that we allow or that we have for you.
I love that, Ray, because you say that you see the 10 to 20 to 65%. Some people are like, "Oh my goodness," right? But the thing is, remember, as you're continuing to make these payments and doing the things that are correct in your business and even in your personal, what happens to the interest rate as your credit score goes up? Have you noticed
Starts
the
to go
rate?
down.
Right. Have you noticed that? Have you noticed that
Starts to go down.
relationship? And so it's amazing that they're even wanting to lend. Now there was a question by Sugar Snap. They had a great question, and that was, what about monthly deposits from real estate, from the rentals? Does that included within the revenue? Is that included for the revenue cash advance? And could that be something?
It is, but we have a couple other products that are even better for that.
Okay.
So when we're dealing about real estate and rental income, that opens up the whole world of stuff, because it depends on where that rental is being held. If that is in the company, if the company's holding the rental, or I mean that goes into a whole nother thing. If you have, say, a rental in a company, we can pair up some things because you have that consistent cash flow. But what I'm going to talk about after we get done with cash flow is collateral, and we compare those two together, and in conjunction if we're building your business credit and we have the trifecta of all three. See, that's why I love real estate, is because I mean, yeah, this works, but when you have real estate, you have rental property, you have cash flow coming in, you can get even better rates. I mean, you can get a whole lot more money. So that's the great thing. Yes, you can, but there's better options because of what you're doing. And that's just me. I love real estate. But
That's
the other
awesome.
great thing about this, the reason people like this is it helps you establish a track record doing this, but also the interest. So say you end up paying 50% and it's at a 3-month period. Yes, that's a little cost, and then next time you're going to get a little bit
There you go.
longer and the rates are going to go down. 100% tax deductible. Deductible.
We can't forget that, folks.
That is very important. 100%. The interest that's paid on this, 100% tax deductible. So it's really an investment into the business if you're having to take this route. That is kind of that's why I really like this. So basically, you get the fees, you pay, they pay back as a write-off. So affordability is what really matters the most. We talk about, if we're doing this, what the monthly rate cost is going to be, because that's very important too. So if we're in that situation where it's going to be a high percentage rate, we're at least going to look at how and what the monthly payment is. Because if we get the monthly payment right and make sure that we can afford that, then it's okay to pay a little bit more in interest, because we're just going to have that as a tax deduction anyway. All right, perfect. Now, so that really brings us. Any questions on the merchant advances or revenue cash advances?
Any questions on that, folks? Awesome.
Because
awesome.
these are really all across the board. Don't require a large credit score. 100% tax deductible in the interest rates, you know, huge range of terms, depends on your situation. But of course, you can go to Wise Guys and Ties, fill out a consultation. We can talk about this.
Perfect.
Also, applying for this, there's no charge to that. You know, really, there's only a finder's fee once that happens, but you'll know all that before we get there.
You know, one of the greatest things that I like about business credit and business financing is, what if your merchant decides not to pay you? Okay, has anybody ever had that happen to them out there in YouTube world? Huh? You know, your merchant just decides, nah, right? If you have the business credit, your clients don't have to go without. Right? You can just go ahead and purchase whatever you need to purchase from the business credit. Go ahead and purchase the client, then live off of the business credit for some time until the merchant's like, okay, you know what? Here you go. I want to give you your money. You know what I mean? So there's so many options that you have when you have financing for your business and lines of credit. Okay. So we just want to let you know why we want to make sure that we're doing the business credit, that we're doing the business financing the correct way. Okay. And if you have any questions, please, that's what we're here for. WiseGuysandTies.com, CreditWiz@InvestorPro.org, and even BizCredit at WiseGuysandTies.com as well. Okay. And don't be afraid to ask those questions, folks. That's what we're here.
Hey, you know what, CJ? Let's talk a little bit about ways about how to increase cash flow.
Ooh.
Because that's very important. So,
okay.
You know, like Timothy was talking, you know, can I deposit my check? You know, I love that question because it's getting that creative thought process going in, like, hey, how can we create some cash flow?
Yes.
Well, what we do, you know, talking about the business credit builder. So building those lines of credit. If your credit isn't very good, you know, if you do have good credit, then we can go out and start sourcing those funds right away. Credit's not so good, we start building your business credit. We can get some vehicle financing in there. Just to get your wheels turning a little bit more, let's say you're going through the business credit builder program and now you're working in the fleet credit, not the feet credit, the fleet credit. We're getting into the world of fleet credit.
There we go.
And vehicle financing.
Yes.
Woo, woo, woo. All right.
Buying vehicles with
Let's just draw a card.
fleet card.
Woo, woo, woo. Vehicle financing. Beautiful.
That's
now,
beautiful.
what can you do with vehicle financing? So, if you ever had trouble getting a business vehicle, commercial vehicle, we can help you do that with the Business Credit Builder program. Working with our advisors and our financial team, we can get you there. Now, what can you do with the vehicle? Let's say you have, you know, a vehicle in, here's your company, whatever your LLC, you're building business credit, go get a little vehicle here. What can you do with that? Well, you could lease that vehicle out. There's a lot of things. Uber. Pair up with somebody, create a partnership, bring somebody on board. You have somebody out there driving that vehicle, and whatever you guys can figure out, you know, having the revenues come in, paying out, you can do something like that. There's Uber deliveries. There's another option. What about Turo? Anybody ever heard of Turo? So it's where you can be an actual, a car rental.
There we go.
So you can do it with your personal car or something, but what about getting a lease on a business vehicle? So let's say you go and get a vehicle that's, you know, what's a commercial vehicle?
F-250.
An F-250. There you go. So let's say you get a big old F-250 truck. On Turo, that would be, those are expensive on Turo. I mean, I would say depending on where you are in the country, anywhere from, it really depends where you are in the country, but anywhere from $80 to $250 a day. A day. That would be the rental income. Now, of course, you need to consult with a good attorney, like insurance and all that stuff to make sure that's in place. But if you're leasing one of these, let's say your payment is $400 a month. $400 a month. You also have insurance that you're going to need to worry about. But when you get a vehicle that big, there's going to be a lot of tax deductions along with that. That's over 6,000 pound vehicle. So we're now talking about a massive tax deduction. If we are talking about that the lease payment, $400 a month, and on Turo, you can rent it out anywhere from $80 to $250 a day. I mean, that's just another option right there. Uber, you know, that, or other businesses that are not in the position to actually get that, because then you could just, you know, lease it out to another company. What about that? Then the payments that are coming back to your business, the maintenance is tax deductible. All the payments, this company's writing off the gas, the usage, or you simply drive it yourself, put a wrap on the vehicle, business wrap. I mean, there's so many different things you could do to create more cash flow.
I know you have more examples, and we could be here all day if you go over every example. But what you're saying is that there are ways to create cash flow while building your credit at the same time?
Yes. So
all of these things you're doing is creating cash flow, but it's also building your business credit at the same time.
Very, very true. So yeah, you can extend lines of credit. I'll tell you about this. I've worked with a lady and getting her on her merchant account. On her merchant account, she was able to take a loan, a $6,000 loan. She took that $6,000 loan from her merchant account that she got a really good term on because she's a nail tech, has constant deposits in. She got this at 6%. 6% interest rate on 12 months. 12-month payment. They're taking money every single day, small amounts every single day, and that's their interest rate. What did she do? She turned around and lent this to us at what is that percentage rate? Possibly, I think it's 12%. 12%. So now, what she did is she took her merchant account, got a loan, put that loan out to, so she took this money and lent it to a different company. So this was in her company, lent it to a different company, and this company is now paying the 12%, where she got this for 6%. They're now paying her back payments. And so she's going to make money on that, and she's adding a new stream of revenue, and that is the magic of the world. If you can understand this and you can scale this, you will be rich.
Wow.
That's what we do. That's what we do all day long.
All day long.
Or imagine you just go find somebody and you need money who already has an established business.
All right.
If you needed money and you can show somebody how they can make money, now you solved your problem. But that's the other beautiful part.
Beautiful.
You can always, we do offer if you have a friend, a family member who needs business credit, who needs financing, send them our way. WiseGuysAndTides.com, Investor Pro, or CreditWizard, InvestorPro.org. Email CJ. Let him know that, hey, I need to get the business credit builder before the year's up and the price goes up. Or you know a friend or family that needs that. You can get your referral fee for sending them our direction.
Absolutely.
We'll talk about that too later. But more for cash flow. Now, what do I want to talk about? Cash flow, venture capital. Venture capital, angel investors. So what is, I know Joseph was talking about this a little bit earlier, what is venture capital? So venture capitalist is an investor who either provides capital to startup ventures or supports small companies that wish to expand their business. So they don't have access to an equities market, they're not public yet or anything like that. Venture capitalists are willing to invest into such companies because they plan on having a massive return of their investment. Now, venture capitalists are very, very unique in the aspect that often a fund is created of pooled money. And sometimes individuals will just invest. But these funds come from the venture capitalists themselves, from wealthy people, from pension funds, from foundations. Insurance carriers can also do this, corporate pension funds. There's so many different types of venture capital, but really what they're looking at is three different things. They're either looking at seed funding, which is the earliest round of financing needed to really to prove a new idea. So this funding comes from angel investors or equity crowdfunding. So when we're looking at seed funding, let's talk about that. Seed funding. That is you got a great idea, and trust me, they want to make sure it's a great idea. That is seed funding, angel investors, because it's a high risk area. You know, they want to make sure that the management behind it, the idea, they want to look at what it is you're actually doing. But there's a great place to get money there. In the very first, this is usually the very, very first round of venture capital funding. Next is startup. So startup, this is early stage firms which need funding for their expenses, from marketing, from product development. So startup, you already have something in development. That's where, you know, it can definitely come in. This could be an equity company coming in, but when you're in startup mode, but you have a product, you need to push the development, you need to push for new products, this is definitely an option for you. We also have a way that we can fund purchase orders. So in that early setup stage, if you have a large purchase order, we can collateralize the purchase order. Very, very important to understand. Perfect. Now, what we call the growth, whoops, if we could spell today, growth.
Here we go.
Or, let's see, or
we've got a great question.
Series A.
We got a question by Tony Love. Can you bypass, oh, this is a good one, Tony. This is a great one. Can you bypass the vendor credit, net 30 accounts, right? Can you bypass the vendor credit approach by using your personal guarantee to establish business credit? He's talking about.
Ooh,
huh?
That is good.
That's kind of what I covered.
That is a very, very good question.
Okay.
And yeah, you definitely, Joseph definitely covered that. But yes and no. Yes and no. It depends. It depends on how many accounts you have. If we really need to bypass vendor accounts, it really depends. It really depends. A lot of times, if it's done right and we go out there and we get you your 5 accounts, then yes. A lot of times we can bypass that first step, but we're still going to need to actually get more lines. We're going to need to go develop some store lines. The vendors, you're going to need in one way, shape, or another. So maybe we are bypassing net 30 accounts, but we're still going to need store credit. We're still going to need to get, you're still going to need to get,
and
it really depends.
I tell you what I found out as well. There are some people that have tried to bypass the vendor accounts, and they were able to get a little bit of business credit and some funding, but in other areas they couldn't, and no one would tell them why.
Yes.
Okay.
That's very true.
So what it's about broadening your options, and that's why we want to start out the right way.
That is very, very true.
When you say it depends,
there we go.
Here's what I think it means when you say it depends.
Yes.
What's your goal?
There we go.
Is your goal to get a
Perfect.
high limit credit card? Yeah, if you got a personal guarantee with one of those hybrid programs.
So we got vendor credit, and then we have store credit, and then we have fleet credit, and then we have cash.
Cash
credit.
So
we're trying to bypass this level in the game.
to get to cash credit, right, then you could have gone back to what I was saying with one of those credit. You can get a personal guarantee, you could get an angel investor to give the personal guarantee, and you can skip to cash credit. But if you ever want your business to establish its own business credit, you're going to have the vendor credit, because it's what the store credit in number 2 is looking for. Because stores aren't going to want to give your business any credit just based off of your EIN if they see that you haven't, if you can't even pay a vendor on time, then what makes them think that you could pay them on time?
Right.
So you make a very good point. I guess the question comes down to, do you always want to have to provide a personal guarantee?
There you go.
That's another aspect of it.
There you go, Tony.
If you want to move away from the personal guarantee, then you're going to have to fill it in at one point or another, because regardless of where you're at, we're going to need to get at least 14 good accounts reporting on your business credit reports.
Perfect. So, Tony, if you want to get away from the personal guarantee and have these lenders start lending you millions based on your EIN only, okay? EIN only. They don't have to mortgage your house. You don't have to mortgage your house, put your house up for, okay? You're going to need to make sure you go through the vendors, because you're building the business.
Why would we want to move away from a personal guarantee? Why? Why would we want to do that?
That's a good question.
Anybody ever, so we're talking about venture capital here. Venture capital, that's what we were kind of talking about. And this is very important, because I'm glad that you brought that up. Who was that?
That was Tony.
Tony, I'm so glad Tony that brought that up. Because if we are in a situation with venture capital, we do not want to be using personal guarantees. Or at least we want to have the ability to move away from personal guarantees. Because in the growth round, you already have a product. Exactly. There's, these are early sales. There's manufacturing already taking place. This is typically where venture capital enters the picture. We had some angel investors, maybe, an equity crowdfunding of some sort. But in the growth, that's where venture capital really comes into play, enters the picture, is Series A. This is essentially the first institutional round. Here's where most companies will have the most growth, because they have the product. They need a huge influx of cash to expand and just blast into the market. Now, venture capitalists are going to want to be able to get that huge profit captured within 5 years. This is very, very important to understand, because they're going to want you to grow, expand, and sell. So whether you're doing a, your IPO, initial public offering of some sort, you're going to be taking the company public, or you're going to be selling off to Google. Whatever, somebody's going to be buying you out. That is what venture capitalists want. They want you to expand so much that somebody's going to throw so much money at you that you can't say no. But this is where everything gets murky and creates a problem. When all your lines of credit for your business are attached to you, and you're trying to sell your company, what happens then? You can't just go and sever the ties of all your credit lines who are personally attached to you. Maybe you get taken over into it. Anybody heard of an acquisition of Beats by Apple? There's a reason that Dr. Dre had to go with it, because Dr. Dre is attached to everything. Wow. Now, maybe you want to get taken over to everything. But in a lot of cases, that could prohibit something from taking place. So it's what's your goal? These are, this is really advanced, high-level stuff we're talking about. Is, some people are just starting out. They're like, well, I don't think I'm ever going to have venture capital. Well, you're already in the wrong mindset. You should be planning to want investors into you. You don't necessarily have to. It really fits into where your goals are. But I'm so glad that you brought that up, because it's very important.
Very important.
Now, what's after growth? There is, let's see, because we're talking about venture capital, angel investing. Then we have second round of funding. That's the 4th stage. Second round of funding. This is working capital for early stage companies which are selling product but not yet turning a profit. So down here, there's another way to go out to venture capital, seek that funding, but you're not yet turning a profit. and that's another great way to expand out of there. So after that, then that's literally what we call expansion. So let's see, we got seed funding, startup, growth, second round of funding. So we got the second round of funding, and then there's the expansion, aka the mezzanine financing. This is expansion money for a newly profitable business. So here we were where we were not profitable, and now we are profitable. So that's the great thing is venture capital investors can come in all different through the spectrum. There's also bridge financing. And the reason we're talking about this is because if this is something that's been very intimidating, where you're like, hey, that would be cool to get some venture capital on board. Well, why are we talking about it? We can help you. That's very important to understand. We can help you with this step. So you may not know any venture capitalists, but we do. And we can help you. There's also bridge financing. So a startup seeks funding between full venture capital rounds. The aim is to raise smaller amounts of money instead of a full round. Usually in that, when we're doing like a bridge financing, it's called a bridge because it just helps you get to the next step. You're usually going to use one of your existing investors to help with a little bit more cash to just kind of push you to that next level. Venture capital usually leave, and like I said, they're planning on leaving due to a secondary sale, an IPO, an acquisition. So that's the other thing too. They're just going to grow you and sell off their ownership, their equity or something like that, or you're going to go public and they'll sell off their shares to the open market, or you're just going to straight get acquired and they're going to get bought out. That's really what's going to happen. They only invest in good ideas, and we want to know how we're going to get paid. That's it. In the next 3 to 5 years. Got to know how much we're going to get paid, or not how much, but we want to make sure that there's a plan in place to get us paid in the next 3 to 5 years and can come on board and this is, we're talking mega millions of dollars if the idea is worthy. So that covers a little bit of our venture capital stuff. I wanted to talk about some SBA loans, but I'm gonna cover the next thing first before I get there, because in order to really qualify for SBA type products, you need to have the trifecta. I call it the cash flow, the collateral, and the capacity.
Perfect.
Woo! Well, no, cash flow, collateral, and credit.
That's right.
But of course, you also need capacity and character. So we need, I guess, instead of the trifecta, what is that?
Pentafecta.
Pentafecta.
There you go.
What about the fivefecta?
Hey, that's better.
All right, pentafecta. I guess that's what it is. Pentafecta. Now, somebody was talking. Before we get into let's see. I'm gonna erase this real quick, and we're gonna get into collateral. Ooh, I was very glad that. Now, who was that earlier that was asking about rental properties?
Let's see here. I believe it was. We're gonna go ahead and look at that real fast. I think it was Tony. That no. It was actually Sugar Snap. Yes.
All right.
Good question, Sugar
What are we
Snap.
talking about now? Talking about the last seat. So we got collateral-based financing. That's where I'm at. Collateral-based financing. So this is any type of viable business collateral. And some types of personal collateral too. So that's the great thing. Even when you're starting out, you're like, I have no business collateral. Possibly you have personal collateral that we can actually bring on board as well. Now, what are some acceptable business collateral things? Accounts receivable. That's what we're talking about. I briefly mentioned that. Being able to collateralize a purchase order. So accounts receivable. Payments that are due to you. We'll go into these a little bit more in depth in just a second. Purchase orders. Book of business. That is strictly, insurance world. So if you're in the insurance industry, your book of business, State Farm, I think it's State Farm. You can't do that. State Farm can't do that because they technically don't own your individual book of business, but other life insurance policies, things like that, if you are the actual owner, there's a couple, network marketing, multi-level type marketing, insurance things. Those don't actually own the book of business, or you personally, so you can't necessarily do that, or your business can't. Equipment, inventory, commercial real estate, commercial vehicles. Now, what I mentioned, personal collateral, what would that be? So stocks, bonds, other securities, 401ks, residential real estate. If you're looking to do a flip, possibly.
Yeah, like flipping the
flip
whiteboard.
The board. That's a great object lesson.
Yes, that's perfect.
Who did that?
Yes.
Well, let's talk about that. Flipping stuff, house flippers. So if you want to get into real estate and you want to flip some houses, you could get 100% financing. 100% financing. You may need to purchase, 100% whatever you would need to purchase, rehab a residential property. Now, our lenders, because this is a little bit slightly different than what you might see on other hard lenders. So our lenders lend 65% of the AVR. What is AVR?
After repair value.
There you go.
No, that's the ARV. You said AVR. That's the after value repair.
Oh, the dyslexia.
No, yeah, is that my dyslexia?
It's all good.
Hey,
that's why I could read it.
Money
That's why I could
doesn't
read it. There you go.
Money doesn't care if I spell things right. ARV,
Perfect.
after repair value.
Yes.
Yes. So 65% of the after repair value. So let's say this property is going to be worth $200,000.
Yes.
How much can we get?
65% of the $200,000. What is that, folks?
130.
You can do it in your head, and I know a lot of you can. Absolutely.
Yep. Well, you just look at what would...
Yeah, the 60%.
It's $65,000 for every 100.
That's right.
That's really what it is.
Oh,
so $130,000. You just need to make sure you're buying at a good enough deal. So buy it for $95,000, spend $35,000 on the rehab, and then boom, turn around and make a profit. You can usually get a 6-month term or get an extension if you need one. And our rates, get this, start about 8% and go up from there. Great stuff. It really depends on track record, or if you're going to need to put some skin in game, personal credit. All these are different factors, but usually not more than 14% at the very higher end. But that's something definitely we can talk about if you're interested in flipping houses. Also, if you are interested in flipping houses, because that's what we do all day long, plus build business credit for our rentals, contact Credit Wiz and Investor Pro, because CJ Wallace is a master investor in real estate and businesses. Yes. He will point you in the right direction. If you want to flip houses with CJ. That's what I'm talking about.
Boom.
So we could do this, we can get really good terms if you got, we'd like to see like a 660 or higher. 660 or higher, you can get really, really awesome terms. There's a lot of times we do this without even doing a credit pull because it's just based on the asset, the deal itself. Lenders want to know that you have flipping experience. So if you don't, that's why partnering with somebody who does have experience like CJ, then that's what makes you can leverage the credibility of somebody else.
There you go.
And I know that, I know a couple people out there have already shown interest in investing in a partnership with CJ. So get in touch with him. He can expand you and show you how to make it happen and be profitable while doing and being safe. This is not just about credit. It's about taxes. It's about legal. It's about a team of competent professionals that you seek in your life. So it's not that you just go out and get one because it was a good deal. Demand high quality professionals in your life.
Because what are we doing? I want to just interject this real fast. What are we doing, right, when we are buying property as real estate investors? Do we buy property? What do we buy? Real quick, and we'll go right back to business financing. What do we buy as real estate investors? The numbers. That's what we buy as real estate investors. Matter of fact, numbers are so important. It's a book in the Bible. So always don't worry about the garden, of the house. Don't worry about how good or bad the house looks. What do the numbers say? That's what we want to look at in real estate investing. Let's hop right back into business financing real fast.
So that was a great little excerpt, but real estate's amazing. That's what it is. So we're gonna get into account receivables financing. So account receivable financing.
There we go.
Oh, there we go. So receivables are used as collateral. This is the number one way of collateral funding. Number one way. This is used so much, and you may not even know that this is readily available to you. Easy stuff. Easy stuff. But loan amounts, get this. I love those things that have broad ranges because it just shows. So starting anywhere from $5,000 to $20 million. Woo! $20 million. That's what I like. All across the board, any business from $5,000 to $20 million. That's what we're talking about. Those are some big loans that it can get up to. 90%. So we're talking up to 90% of your receivables. And if you've already gotten it set up, 24 hours. So that's usually up to 90%. The fastest is 24 hours. 4% fees, that's usually very, very common on this. Is usually there's like a 4% fee. And then usually there's discounts, different things like that. No credit score required to qualify. No credit score required. A lot of people love this because up to 90% of your receivables, no credit checks, low fees, low percentage rates, awesome stuff. So let's clarify. The receivables, these need to be coming from another business or government agency, not an individual. So CJ owing me money doesn't qualify. They want to see a business. They love government agencies. If you have a government contract, beautiful. Business, now this is very important to understand. They're not going to care as much about your business than who actually loans you money or owes you money. This is kind of one of these weird situations where they don't necessarily care about your credit. They don't care about your bank statements. That's why it's so common. You could have horrible credit, nothing but non-sufficient fund fees. They are going to look at who owes you money. This is remember what goes back. They want to make sure they're getting paid. So they're actually going to care about, okay, who's this coming from? What's that business? What's their credibility? They're going to look to make sure that those businesses have been open for at least 1 year. Now, a lot of times if you're a doctor or work in the medical field, medical receivables can qualify along with construction and conventional receivables. This is great stuff. This is all across the spectrum. Who are you receiving stuff from? Now, $5,000 and up to 95% of the purchase order can be advanced. 5% less fee is released once an actual invoice is paid. So let's go back and talk about that. You have these accounts that are due to pay you. They're going to look at those companies. They're going to make sure that they're worthy enough to pay you. They're going to give you the money and then make sure that those businesses pay them directly. That's really the way it works. That's the way it works. So let's go a little bit further into that. Purchase order financing. So this is part of this. Let's look at purchase orders. Ah!
Purchase orders. Now that's going to be under account receivable.
Yes.
Good.
Because somebody wants to purchase something from you. We can get you up to 95% of that purchase order. Small rates, 1 to 4%. Very, very very awesome rates actually. No credit score requirements to qualify. A letter of credit is issued initially. It cannot be for unfurnished goods or unfinished goods. So this isn't going to work if it's an idea. You need to actually have something already set up with somebody, they can produce. You need to be that far in the process. And somebody comes along, wants to purchase 300,000 units from you. 95% of that we can fund you, start production, pay employees, get all that taken care of. Beautiful. So if you've ever known somebody, or maybe you're in that situation where you have a great idea, you got enough money to get it up and running, you got a little widget together, but somebody came along, they want to buy a million of them, and you don't have $1 million to start production, come to us. We will help fund you on that deal. That's what it is. Awesome. What else did we talk about? So in Collateral, we talked about, let's see, is there any questions on purchase orders?
Any questions on purchase orders? Someone said, can I send the check? Sugar Snap, creditwiz@investorpro.org. If you want to get started, creditwiz@investorpro.org. When is the best time to plant a fruit tree?
So you can be enjoying like that delicious, succulent apple.
Yeah.
Right now.
Right.
10 years ago.
When's the second best time?
9 years ago.
9 years ago. Then 8, then 6, 5 seconds ago, and today.
Right. Awesome. Man, I know you guys are learning a lot, man. Just go ahead and ask those questions. Jeffrey, you're in. creditwiz@investorpro.org. Absolutely.
Well,
we can get you started.
Just a reminder, we're wrapping it up here because we're coming to the end. But what's that business credit builder going for in case you got some new people that came on?
Oh, yes, that's right, Jeffrey. You don't know, huh? It's going for 2019. Why are we doing this? Because next year is 2019 and the price is going up. So we want as many business owners that are watching us right now to take advantage of this business credit builder. We want their business credit profile to be strengthened.
Doing toy stuff?
Okay.
Because you're talking about this right before here too. We're going to get book of business in a minute. So if you're in the insurance industry, stay tuned for this.
Oh, yes.
All right. But the business credit builder, we talked about that earlier. It walks you through setting up your character of your company, your capacity. They want to make sure that you're credible. So making sure your whole business is set up right, whether you have a business or you want to start a business. Then we walk you through the process of acquiring 14 accounts that report, because most accounts don't. That's the problem. Make sure that we get those, and we're going to get you $50,000 in the next 6 to 12 months at a minimum. We'll work with you until we get you that. It's a fantastic thing. So working with our financial team, our financial advisors, that's what it costs for the whole system to get you through that hand-holding process. 2019. And the price only goes up at the new year. Absolutely. But Merry Christmas. Because it is Christmas, we have partnered with Toys for Tots.
Which is part of the Marine.
The Marines have an amazing foundation that provides or makes sure that Santa hits children all over. Toys for Tots. When you get started at the 2019 price, we will put your name on a $100 donation to Toys for Tots, so you can feel good about getting your business going, at the same time giving to a charitable cause. We'll put it in your name. It's also a tax deduction. I mean, that's But what is it really about? It's about helping others. You're helping yourself, your business expand because somebody out there needs you, and at the same time you're helping other kids along the way. That's what it's all about.
And Ray, could you for just a minute put 150 up there and a dollar sign by it? 150 up there, because I want to let them know what I'm doing. So once you get the business credit builder, that's the number, $150, that my business will cut your business, right? Now let me say it again. My business will cut your business a $150 check. Why? Why is that? To get you started building your business credit. We could talk about this for hours, folks. I know you guys got to lay down, but I wanted to let you know that that's what I'm going to be doing. My business is going to be doing that for your business. Why? Because we take responsibility for your success. Okay?
So it's like a $150 rebate?
Yeah.
Okay, wait a second.
That's what it looks like.
So, do they also get the Toys for Tots?
The Toys for Tots? Yeah. Oh, yeah. You got it.
Gosh. Hold on. Let me write that up there just so we know. Okay. So, if we got the Biz Credit Builder is only $2,019 today if you email creditwiz@investorpro.org. So with that, you're going to get $150 rebate
to build your business credit.
That's right.
to help pay for those starter accounts.
That's right.
Yeah. To build. Wow, man. Plus, you can feel great because $100 is also going to Toys for the Kids.
Tots.
Toys for the Kids. Toys for the
Perfect.
Kids. Wow. It's a $250 bonus. I don't even know what you call that. It's like a rebate / bonus because that's a tax deduction and you're getting cash back. Beautiful. That's some great stuff.
It is.
I don't know what a better incentive to do would be. So either call 888-524-9273. That's 888-5BizCredit. Or send an email to creditwiz@investorpro.org. Get started. Or if you just need to find out some more information, as long as you go either email CJ or go to wiseguysandties.com tonight and fill out the consultation form, get your questions answered, because you're like, hey, yeah, that sounds great. I just need to know some more details. Perfect. Leave us a message because it is kind of late. We'll call you back tomorrow, get you all set up. Get your questions answered. All right, back to the show. What were we talking about?
Have a good night, Sugar.
You're wrapping us up on Book of Business Financing.
Wrapping up on Book of Business.
What's in this? Book of Business. This is our insurance sales guys. So commissions from the Book of Business serve as collateral. Bet you nobody ever knew that. And if you know an insurance agent, go tell them, be like, hey, Christmas time, you might run into some issues. Maybe you need a little extra boost. They can leverage their Book of Business for insurance agents only. Now these come in all different forms, but typically 3 to 10 year term. So 3 to 10 years. It's 4 to 9% plus prime. 4 to 9% plus prime. The great thing is you don't need a great credit score. All you need is really higher than a 520. You can borrow as much. Now this is it. You can borrow to 120% of the surrender value. How cool is that? Now I'm sorry, State Farm, you guys can't do it because you don't actually own your Book of Business.
Or the network marketing firms.
Yeah, network marketing firms. But that's okay. You can still build business credit and get all those cash credit lines. So that is an option. All right, so that's Book of Business. You can definitely get your funds over there. What else we got? What about equipment financing? So equipment financing, let's just go over this. It's for startups can qualify.
Oh, yeah.
it's really, so let's write up there real quick. So equipment financing. Equipment financing, this is anywhere from like $10,000 to $20 million, same type deal. So shorter terms, 12 to 48 months. And then we also have rates of anywhere from 5% to 55%. And what did I say earlier about when I really see those huge spreads? I love seeing those huge spreads.
Yes,
because
we
it's
love
good
it
for everybody.
It's good for everybody.
Everybody. So all we need is at least 580 FICO score. So even, they really prefer to see you at 650. But even if you're down low, remember, your percentage rate is just going to be factored on the risk. That's really what it is. They want to make sure you can pay. If you're a lot riskier, you're going to be at the higher end. But the down payment can be as little as the first and last month's payment. Very affordable way to do it. So that's equipment financing. We could definitely help you do that as well. What else do we got? We got equipment leasing. So you need to be in business. This is a little bit different. So you need to be in business at least for 1 year. Same kind of 10,000 to 20 million type deal. Short 12 months to 48-month loans, terms. It's really kind of the same thing, except for it's a lease instead of a it's just slightly different.
You have to be in business.
Yeah, you have to be in business. So if you have equipment and this is something you want to explore, talk with us. We can go more into depth in it. I don't want to necessarily bore everybody on all the ins and outs of how it actually works with each piece of equipment, stuff like that. Because there's also equipment sale or a lease back type thing. You can usually borrow up to 50% of the equipment value, which is it's very awesome.
It reminds me of the reverse mortgage.
Yeah, it's really like a reverse mortgage for your stuff. Getting like a car loan or a payday loan type thing, but for your equipment. But it's really not the same thing. You're doing in a business setting, and you're doing this at much better terms than something like that. I mean, these are 5% to 55%, but something else doesn't require a huge credit score. It is preferred to get a lower interest rate, but something we can do. Now, inventory financing, because a lot of people talk about, like they say, hey, I got a whole bunch of inventory. What about that? Well, if you do have actually, we want to see that you have at least $500,000 of inventory. So you got to have a lot of inventory. We want to see that you have that much, then we can get you pretty much, the loans range anywhere from like $250,000 to $500,000. The cool thing is, these a lot of times are in like a line of credit type deal, 2 to 5%.
Wow.
So,
and this is inventory financing?
Line of credit. Oh, yes, I didn't write that up there. This is
perfect.
Let's write this up there.
Inventory financing. For my Amazon business owners. Amazon.
Inventory financing. So, bring up a good point though. You do have to own the products. You gotta own the products. But if you're selling on Amazon and you do hold the product, you own the product, you can definitely do this. No credit score requirements. Like I said, you must have at least $500,000 of inventory to qualify for the loan amounts as high as really 50% of what you have in the inventory.
Well, wait a minute. That's the line of credit, but can't you also get a loan off of the inventory as well?
Can you get a line and a loan at the same time?
Both.
Yeah.
Woo.
So they really work the same way. Line of credit, we can do 50% of the inventory. We can also do a loan. Loan is the exact same way, 50% of the inventory. It really depends on what you're doing. As we know, if you have the option for a line of credit, me personally, I take the line of credit over loans any day. Why? Because you can manage it a little bit better. You don't necessarily have to pay for stuff that you're not using, because if you take a loan, you take all $50,000 up, or 50, let's say you take $200,000 up front in a loan, you're paying interest on all $250,000, but let's say you aren't going to use half of that for another 2 or 3 months. It just depends on your situation. That's really what it is. But either way, it gets you the money you need. Now,
I want to just interject something real fast here. a line and a loan, real quick, the difference between it. The line of credit is like playing catch with somebody, right? You're pitching the ball back and forth. And the loan is like you're playing catch with the invisible man. Okay. So your money goes away and it doesn't come back. On the line, it's a pay borrow, pay borrow, pay borrow system. So that's very, very good, Ray. Good explanation there.
All right, mentioned briefly on the personal side, securities. So if you have some stocks, or your business could own some stock, we have securities. 90% of stock value. That can be collateralized. So usually 5-year loans, 5 years. The interest rates are usually at prime plus about 2%. No credit score requirements. Most stocks and securities are accepted. There's an application that's required and a copy of your stock statements. So that is an option if you're looking into, say, hey, I got a lot of stocks. How can I use that, collateralize that, so I don't have to necessarily cash out my stocks? That's a great thing. A little more onto, so that's securities. And of course, if you always have questions, fill out a form for a consultation. Now we have commercial real estate. So commercial real estate, this is awesome because anywhere from like 75,000 all the way up to 20 million. It is a great thing. Now what's going to be required for this? 2 years of financials and tax returns and P&Ls. So debt schedules, they're going to want to see a lot of different things. The business must have cash flow, 200 or at least a 650 FICO credit score. Personal guarantees a lot of time come along with this because they're going to need to see we're talking big bucks here. You can use this to purchase or refinance commercial properties. You can refinance, now this is a cool thing, a commercial real estate loan can refinance several residential properties. So say you have several rentals that are all single family homes, you can actually get a big loan to refinance all of them, strip equity, whatever your strategy is. But the important thing is to understand the documents. What type of documents are they looking at? They're looking at the financials, 2-year financials, tax returns, P&Ls, debt schedules. But why are they looking at all that stuff? That's important. Remember, it goes back to, are you going to be able to pay? Are you going to be able to service that debt? But also, you want to know what they're going to look at. They're going to look at all these things. So as you're going through your business, you want to be conscious of at some point, somebody's going to be looking at your tax returns if you're looking to get money. Somebody's going to be looking at 2 years of financials. Somebody's going to be looking at profit and losses. But they're looking at it for a reason. And you have to be careful that you aren't messing any of those up. So I always say get a good CPA, get a bookkeeper. If handling the books is not your forte, if you're too busy, outsource that. Get a third-party bookkeeper. And if you have investors, they're going to want you to have a third-party bookkeeper. But the important thing is make sure that nothing on that documentation is going to hurt you if you really want to move forward in this. All right, so that wraps up commercial real estate. And of course, it really goes into more depth of this, but we want you to understand the different types of financing that we can help you with. We can help you with all of this stuff. Another thing what about a 401k? 401ks.
We just have 500 more elements to go, folks. Just 500 more.
IRAs. Now, we raise a lot of funds through self-directed IRAs for real estate. It's a phenomenal way to do that. And if you want to know how to do that, contact CJ at creditwisdominvestorpro.org because he has experience with that and he can help you figure out how to do that for your real estate. The cool thing about using IRAs and 401ks as a collateral in a loan, you can get up to 100% of their value. 100% of the value. Usually you can get like a five-year loan, no credit requirements. Usually the interest rates are very reasonable. They're prime plus, 2%. So somewhere in like 4 to 6% usually is the percentage rates. Now, when they actually make the loan, what they do is they just add their fee into that. So as you're paying everything back, the lender fee is basically in there. Usually it's right around $2,000 for that lender fee. And that's just rolled right into that. But of course, if this is an option that you're wanting to look into, like, hey, I have a 401k and IRA, I want to see about how to collateralize that, we can definitely do that. Or if you want to look into how to self-direct your IRA and invest into a business, that is another thing, another topic for a different day. And reach out to CJ. He can definitely help you with that.
Absolutely.
All right. And what else do we do? We can also do commercial vehicle financing. Now, I started to touch base on that and how to create more cash flow and revenue into your business, but you can get the money. That's part of our business credit builder program. So getting the money to purchase commercial vehicles. If we're going the route of collateral, where they're going to retain some of that ownership, because this can be done in two different ways. It can be done in the no personal guarantee side, or it can be done here. Now, if we're doing it in the collateral side of lending, this is usually a very, very expensive thing. So big buses, trucks, emergency vehicles, ambulances are very, very expensive. So it'd be something like that. Can borrow against free and clear vehicles. So if you own a vehicle, can borrow against that. Remember, building business credit can help you with vehicle finance, or actually it will help you with vehicle financing if you follow the steps without personal guarantee, because in this situation, most of the time you're going to need a personal guarantee if we're doing something like ambulances, stuff like that. Now, business credit, why do I love it so much? Because, wait, did I just put two?
Two S's.
I was talking about buses. That's what it is. I'm just like, bus. So business credit. Business credit is the kind of the catch-all.
Here we go.
I just can't spell today.
We knew what you meant.
Yeah.
It's the middle of the night.
It's the middle of the night. That's what it is. Been running all day. So, why do I love business credit so much? Because
Leverage, folks. It's about leverage.
Personal credit doesn't matter. Personal guarantees, no. Cash flow doesn't matter. Collateral doesn't matter. Building the business credit is kind of that, just takes care of all of it. So reports only to the business credit reporting agencies. Our business credit program utilization doesn't affect your personal score. So I know people were talking about that earlier, oh, how do we, worry about utilization, things like that. The way that we build business credit, if we're doing it over here or on the secured business credit financing, we're getting those lines that are not going to be reporting on your personal credit.
Perfect.
May require personal guarantee, but it's not going to be messing up utilizations. So you can max out those lines. Not going to hurt you. You can apply for, if we're doing the no personal guarantee, can apply for a lot of lines of credit without having any inquiries on your personal credit. That's a fantastic thing. Business credit determines if having good business credit, that'll determine if your business is going to get a loan, if your loan is going to get approved, period. Also it will determine the amount of loan or the amount of the line of credit that somebody's going to get. We talked about how the percentage rates are directly correlated to the risk. When you have built your business to the credible level that we do in the business credit builder, you have established that credibility and you're at a lower risk. So you're going to get the better rates and you're going to get the favorable terms. You're going to get the approvals. That's what it's all about. So that's why I love the business credit, because we're going to help you get to the point where you're making the cash flow, where you start to have the collateral, where you start to have the credit and the assets to do everything you need to do. Woo! Any questions on that?
Any questions, folks? Awesome. Tony says reusable. Oh, yes, for that one comment. Yeah. Everyone, this is the thing. When you want to get business credit, when you want to establish your business credit profile, you want to get with someone who has done it, is doing it, will continue to do it. You're going to get with some people like the wise guys in ties with CreditWiz and InvestorPro.org. Remember, the education that you learned tonight is valuable. Okay, so I just want to let you know, don't forget what we're offering tonight. Okay, the Business Credit Builder, $2019, okay, for the brand new year. Kick in the brand new year with an awesome business credit profile. How about that? Okay, starting to build business credit. Let's start building that business credit for the new year.
Can I
Okay,
close
Beautiful.
hey, go for it.
I'd like to close with one thing. I want to thank you so much. Man, 2.5 hours, and your people are sticking with us. They're
Yes.
beasts. They're
Yes.
animals. They're hungry.
Oh,
Hey,
yes.
look, I don't know what your 2018 was like. Did you accomplish your goals? Are you living your dream? Or maybe you're just ready to start accomplishing your goals or your dreams. That's why the price is where it's at. We're talking about business credit for $2,019, right? Because look, you got a dream. I've talked about this many times. You got a goal. What did God put you on this earth to do, right? You know what it is. And what has He inspired your heart? What has He put on your heart? You want to go into business to create that. You don't want to be in debt. You don't want to be a slave to a job. You want to create your vocation, your calling, what you were put here to do. You have dreams, and we want your dreams to start coming true in 2019. That's why we were inspired to put the price at $2,019, really. But okay, there's no shortage of dreams. I have dreams, you have dreams, CJ, Ray, we all have dreams. Here's the point. There's no shortage of dreams out there, but there's a shortage of people who will do whatever it takes to make their dreams come true. Make yourself a priority. Make your business a priority. Make 2019 the year of the Lord's favor. All right? So get started with us tonight. Go to CreditWiz at InvestorPro.org. Call 888-524-9273. We're eager to start working with you, plugging you into, hey, if all of that was not enough for you, once you start working with us, we plug you into the loan advisors. You can talk to them for hours and hours about and go over all of these programs. Because some people are asking, what's the name of the bank? What's the name of the program? Well, when you start working with us, that's what you're going to get. You're going to get all that information. God bless you. Thank you so much for having Wise Guys and Ties. For me, for Ray, we want to thank you. God bless you. And have a good night. We'll turn it right back over to you, CJ.
Hey, thank you so much, Joseph. And with that, folks, do something today that your future self will be thanking you for. And when you get connected with the Business Credit Builder and Wise Guys and Ties, you'll be thanking yourself continually. All right? Folks, thank you so much for staying back. Thank you. Good night, and God bless.